这个好像我点了另外一个。哎，依然我唔知而家就係呢個直播係咪用之前嗰個 live？我仲未實質嗰個，係我見到就係你話有一個新過呢個啦。但係我啱好似佢開出嚟嘅係之前嗰個舊喎。嗱，而家都係停止直播，佢都冇設置嗰個。你哋而家好唔好？
係咪可以喺個 setting Zoom 入邊
Zoom setting
web 版？
嗱，呢個就係變成我哋上次嗰個，就係我哋 test 嘅時候嗰個，係。
咁可唔可以？我平時就話喺 Zoom
係唔緊要，我哋就睇。錯呢度。
呢個係
或者用 Google search 嗰個360個字，打開一個。
得啦。
唔緊要，我哋仲有時間。
唔知咯。
OK， 自己。等等。
嘥啲咁講咗 SSO。
啱。我係咪先結束？係咪結束？Hello，係咪先結束？
Hi, Victor.
早晨。
早晨, can you hear me?
Yes.
Okay, that's good. Yeah, that's good.
Yeah, we are still waiting for setting up on the Bilibili live part. There are some technical issues. Yeah. So.
Okay. So for those in mainland China, right? For Bilibili.
Yeah.
Okay, that's good. Okay. Hello.
Okay, hello.
Morning. Hello. Hello, everyone.
We have some speakers in the room. May I introduce?
Sure.
Yeah. So I think Asher, are you here?
Yes, I'm here.
Hello. Yeah. So this is Dr. Asher JV from Mercer University in New Zealand.
Good morning, everyone.
He will present this afternoon. Yeah. I think now it's afternoon, right? In your
it's almost around 2 o'clock.
This is Professor Feng Tong, our IOFC director and the GRM chairperson, and Professor Mi Keng, our urban studies program director, and IOFC and HKI APS associate director. And I think we also have Prof. Leung Chong. Are you here? Oh, I also see. I see two other speakers entering. Prof. Fan Ying.
Hello.
And also Dr. Hu. Okay, nice to meet you both.
Nice to meet you.
First time to meet you. Yeah. So I think Dr. Hu is from Jinan University in Guangzhou. Yeah. And Prof. Fan, hello, nice to meet you.
Hello, nice to meet you.
Prof. Fan is from Hong Kong Polytechnic University, the Building and Real Estate Department. Hey, hello. And Prof. Leung Chong is from.
Victor, you mute yourself.
Yeah, when there are my student just told me when there are new entering, I may be muted. Maybe we can remove the waiting room setting so that I won't be interrupted if a new is. I won't be muted. Let me see. Hello, I think Jeff is also here, right?
Yes.
Hi, morning.
Yeah.
You will be the first speaker.
Okay.
Yeah. So Jeff is also from Hong Kong Polytechnic University.
Hello.
I think we wait another 1 minute and then we start our session. I think more will be joining in later when the symposium starts. And maybe I can also start the recording soon. And good morning, Professor Shen. Thank you for joining us.
Good morning. Did that work?
Okay, good morning, ladies and gentlemen. Welcome to the symposium on homeownership financialization and the real estate market. I'm Li Jin Victor from Department of Geography and Resource Management. I'm Deputy Director of Center of Land Resource and Housing Policy, Institute of Future Cities. I'm the moderator of today's event. Today, this symposium is hosted by the Institute of Future Cities and supporting organizations including Department of Geography and Resource Management, Urban Studies Program, and Hong Kong Institute of Asian Pacific Studies. So first of all, may I invite Director of Institute of Future Cities and the Chairperson of Department of Geography and Resource Management, Professor Feng Tong, to give us an opening speech.
Hi everyone, good morning. Dear honorable guests, colleagues, ladies and gentlemen. I'm much honored to deliver this opening speech in this online symposium on home ownership, financialization, and real estate markets. Congratulations to Professor Victor Lee, my colleague at both the Department of Geography and Resource Management and Institute of Future Cities, CUHK, in initiating this idea and organizing this important symposium. As academic institutions, we are more accustomed to organize face-to-face conferences for presenting our works, sharing new research findings. And through these symposiums, we hope to establish more rigorous collaborations among us for future research opportunities. However, as affected by this global pandemic, COVID-19, many of us are now conducting international symposia through online platforms. We may be locked out, but our works continued. From another side of the perspective, we incur much less carbon emission due to traveling. Certainly, we cannot dine together and chat over wine and dinner. But I think you can achieve equally well on our academic exchange and flow of ideas. The Institute of Future City was established in 2013, aiming at pooling colleagues to perform interdisciplinary research for future cities. We have colleagues coming from geography, architecture, engineering, public health, anthropology, and many others to work on many projects related to future cities. In the Institute, we have 4 research centers and a research program. The Center of Land Resource and Housing Policy, as reflected by its name, is particularly focusing works on land resource availability, housing policy, housing price, and affordability studies. The theme of this symposium is highly relevant to most of us, particularly those who work and live in cities. CUHK is the coordinator of the SD network in Hong Kong. Out of the 17 SD goals, goal number 11 is sustainable cities and community ranked top in one of the SD goals that we want to achieve here. In this high-density city of Hong Kong in particular, despite our prosperity and vibrant economy that we create and generate, how to plan, build, and maintain a sustainable city is a big challenge here, particularly in terms of housing, which has been a long problem issues in here, Hong Kong. Where to find land to build new homes? How do, common citizens finance their investments and their home? The skyrocketing housing price creates many burning issues on affordability and directly or indirectly on the size of the houses, whether they are sustainable, livable, and how home ownership scheme may have affected the work-life balance. With an aging population, how the housing market should be developed to cater for the need for those elderly for a decent and quality life. How the real estate should be developed with a changing urban landscape, in particularly when the city is moving fast towards the adoption of some smart technologies. We may have many other questions in our mind, and many of these questions, in fact, is also in the mind of the government, developers, real estate investors, and perhaps every citizen who are keen to raise their voice on issues related to housing and ownership, home ownerships. We academic people at university can play a key role in our research through our collection of data and information, making pertinent hypotheses, testing models, as well as performing policy analysis on the feasibility, impact, and potential benefit, threats, and risks that may arise. I'm very pleased to see the variety of research topics that speakers are presenting in this symposium. I'm confident that through this online platform, we will have very fruitful discussion, sharing, and perhaps, as I have mentioned earlier, more collaborative research work in the future. I wish you all a very successful symposium. Thank you.
Thank you very much, Professor Fong, for your opening speech. Next, may I invite Professor Ami Kang, Director of Urban Studies Program and Associate Director of Institute of Future Cities and Hong Kong Institute of Asian Pacific Studies to give us an opening speech.
Good morning, everyone. Good morning, Professor Fong, Professor Lee, colleagues, ladies and gentlemen. Thank you so much, Professor Lee, for inviting me to say a few words. So I would like to congratulate Professor Lee and everyone for organizing this very timely symposium. I'm sure some of you are experts in the field, and you probably know that home ownership financialization is a big issue in Hong Kong. I don't know whether you know these figures. According to the Hong Kong Monetary Authority, 85% of our domestic loans in our city, they are related to land and property development. And housing debt in Hong Kong actually amounts to 90% of the city's GDP. And 68% of these 90% are actually related to mortgages. So in a sense, to most households in Hong Kong that carry a mortgage, housing is both a need and also a wealth asset, potentially wealth assets. Recently, I actually read George Ryan Collins' book, Why Can't You Afford a Home? You probably will be surprised. So home affordability or housing affordability is not just an issue in Hong Kong, but actually an issue in many other global cities as well. So he actually talks about this housing finance feedback cycle. How banks actually these days, instead of lending money for productive activities, they lend a lot more to households for buying housing and real estate. And in fact, you know, these banks even securitize residential mortgages to attract more and global investments into the property sector. And we all know that accounts for the global financial tsunami more than a decade ago. However, as Professor Fong just mentioned, and also like the Urban Studies program at the Chinese University of Hong Kong, we always aim at training future urban leaders who will try their very best to promote an ecological and humane urbanism. And so, you know, as cited by Professor Fong, you know, Sustainable Development Goals 11, we all know that housing as a basic need is very important. It's indispensable for us to establish ourselves or building our families. Although, of course, it would be nice if housing also provide, you know, us as a wealth asset as well that would sort of like sustain our financial well-being. Anyway, if we refer to United Nations Sustainable Development Goal 11, especially Target 11.1, we understand that, you know, it's very important to ensure access for all, you know, in terms of adequate, safe, and affordable housing, and of course, the related basic services. So I really hope that you will have a very fruitful and meaningful symposium, allowing everyone to understand more about all this whole mechanism and phenomenon of home ownership financialization and real estate development, so that it will inspire us to reflect on the importance of treating housing not just as a means of wealth accumulation, but also as a social good. So I think it's so important for us to really realize the importance of redirecting finance for more productive employment generating economic activities that at the same time, you know, help us to tackle the challenges of the 21st century and allowing us, you know, to have housing not just like as a financial wealth asset, but also, you know, a social good for our human flourishing. So I hope this symposium every success. Thank you.
Thank you very much, Professor Ng, for your opening speech. I would also like to take this opportunity to thank a few other persons in supporting this event. First, I would like to thank our Executive Director, Evian Chen of IOFC for her excellent support in the organization of this event. Thanks also go to my team members, Mr. Wang Daikun, Dr. Huang Yaoxuan, and Mr. Gong Weihang for their various kinds of support during the organization of this event. And the last but not least, acknowledgement goes to the Guangdong Hong Kong Macau University Alliance Symposium Fund for their financial support of this event. Next, before we start our presentations, may I invite participants to turn on your cameras, and we have a Zoom photo. Okay, so okay, let's take some photos. A photo. Okay, thank you very much. I will send you the photos after this event. Okay, without further ado, now may I invite the first speaker, Professor Shen Jianfu from the Hong Kong Polytechnic University to give us his presentation. His topic is do investors value clawback provisions equally as a case of routes? Professor Shen, the time is yours.
Okay, let me share the screen first. Okay, can you see my PowerPoint?
Yes.
Is okay, right? All right. Good morning, colleagues, friends, and everyone. It's my pleasure to join this symposium, and I really thank CUHK and Professor Lee to invite me to have this honor to present my paper. Okay, so my paper actually is related to REITs, okay, real estate investment trust. So it's not directly related to housing, but it's actually but it still is a very, very important. REITs is a very important investment tool in the real estate market, and I hope that you may be interested in my paper because recently you know that the REITs it's a relatively hot issue in Chinese capital market. Okay, because after several years discussions, negotiations, finally public REITs is allowed to be issued in Chinese exchange market. Okay. All right. So for my presentation, I will give some background in the REITs, in case that some of you may not be very familiar with the REITs, and then I give a little bit information about the trend in the REITs, in the REITs market, especially in the US, because US is the first. I think it's the first market that issue the REITs, and the land is developed quite well in this kind of products. Okay, and then I'll give my the motivations and the research questions in this paper, and the data, and then I will present the hypothesis and the model and the empirical results. Okay. Okay, so I think that most of us know well what are the REITs. Okay, so REITs actually is some kind of the securities. So it's a process to securitize the real estate properties, and then to issue some issues and trade in the major exchanges. Okay, so REITs in the US actually is quite very popular, some kind of very popular investment tools, and the data show that almost, I think it's 145 million Americans, they invest their pension funds or some other retirement accounts that in this market. So it's a very big market, but unfortunately, in mainland, in China, we just start to do this. Okay, so I believe that in the future, this is going to be a very important, also very important market for China. And this actually some kind of tool not allowed investor to access the property market indirectly, but it's also allowed the local government or like some investor to finance whatever the infrastructure investment or some others. Okay, so in the US, the main types of REITs can be divided into two major types. One is equity REITs, another is mortgage, and the third one is called hybrid, but it's actually is a combination. So between these two, okay. So this actually equity means that the underlying assets is actually some like office or like industrial assets or even infrastructure or data centers. Okay, and the mortgage is just to buy some like mortgage loan, mortgage securities. So it's the recent trend in the market is most of REITs or majority REITs is in the equity market. Okay, is to buy some the underlying assets is related to like residential and like retail. Okay, so this is some traditional properties. So another trend in the US market is the REITs or the largest REITs or REITs. It actually is quite a large market in the US. It's around like 2.5 trillion US dollar gross assets. This is the asset value, property asset value. Of course, in terms of the size of the housing, some others like commercial properties, this number is not large, okay, because the property market actually is quite very large. 2.5 trillion actually is still quite a significant number. Okay, and another trend that I want to point out is currently the REITs market shift to some non-traditional assets. Okay, so at the very beginning, if you know the REITs in the US, you know that the Simon Property Group, this REITs used to be the largest in the US. So the focus of this company is on some retail, okay, retail real estate. But recently, we'll see that there are some like REITs like American Town Corporation or some others. They focus on some new types of properties like telecommunication towers or like data centers. So the base idea is as long as these assets can generate some stable cash flows in the future, it can be used to be as asset, underlying assets in the REITs. And recently, it could be more in the like these new types of the assets or the infrastructure. Okay, so Hong Kong is a very biggest REIT is called Link. Okay, so we most of us probably are in Hong Kong, are from Hong Kong, so we know that the Link is quite large. Okay, but I think that recently we trying to start to promote the infrastructure REITs, and we'll see that around 9 companies start to be approved to have IPO in the market. So we will be trade soon. So I will expect that later on there will be more research, okay, also in the this REITs in China. Okay, but I think that this could be play an important role. But this is not the topic that I will present. So I mainly the topic I will discuss is some corporate governance mechanism inside the REITs, okay, or in the REITs market. So the policy I will discuss is called clawback. Okay, clawback. So clawback or clawback provision is some policy that required by the US SEC, Security and Exchange Commission. They ask that a company need to start to consider to impose these clawback policies in their whatever corporate governance. Okay, so the basic idea is these provisions or this policy will allow a company to recoup the compensations from the managers. So then there are some conditions. Okay, I will give some detailed example, one or two examples. But there are some conditions that when it a company can do this, and then at what condition or when it happened. So the main condition is two. One is if the managers have some misbehaviors in report the financial performance of this company, then it's possible, it's likely that the clawback provision could be triggered. Okay, so a very clear signal is there are some like financial misstatement. So it is the CEO or the CFO may make some like fake numbers on the earnings or some relevant financial items in the financial statements. Okay, so this is the first one is the misconduct by the CEO or CFO in the financial statement or financial performance measures or reporting. Another is directly engaged in some misconduct. Okay, so probably have some like sexual harassment or some harassment or some behaviors like that. So it will allow this policy will allow a company to take back the previous already paid whatever the compensation, okay, to the CEO or CFO or some other officers, okay, or some other managers. Okay, so one question you may ask that why this clawback policy is needed in the market. Okay, so this actually start from 2002, and then most of the companies start to really serious consider to input or install this policies from 2010. Okay, so one reason is because the regulators reflection. They have some reflection on the what happened in the financial crisis. So one thing they believe is probably is the optimism in the CEO or some executives' behaviors. So they try to purchase their own interest and then try to have like some like short-term interest over the overall the company's interest. So like CEO or CFO, they have some incentive to misreport the earnings. The reason is simple, is because some of their compensation is from the owners, or a major compensation is from the owners or the stock options in a company. So if a company can manipulate the earnings, this could help the CEOs or CFOs to get more bonus or had to a better timing to exercise their stocks, stock options. So in this case, initial intention to give the managers this incentive-based compensation is to incentive them to better to purchase the interest of the government. But however, they still have some like conflict of interest. They still have some agency problems. Okay, so in sum, this clawback policy is some kind of the new corporate governance mechanism. And I will show data later that you will see that a very significant portion of the companies have started to adopt this clawback policy in their corporate governance. Okay, so there are some studies related to these clawback provisions. Mainly it's from 2010 because the majority companies start to do this after 2008. Okay, and why interesting in looking at this clawback provision in the REIT market? So the reason is simple, is because REITs actually give a very special setting to consider whether corporate governance, some corporate governance mechanism is necessary in this market or not. Okay, so someone say that probably it's not very important for a REIT to have some internal corporate governance. So the reason is simple, is because REITs have a very strict regulation. So for example, that they have to be invested in the real estate assets, have to pay out most of the incomes from real estate assets. So in this case, the institutional arrangements in this market could be substitute the potential like substitute the internal corporate governance mechanism. So some additional governance like the clawback or some additional like some restrictions on the CEO's behaviors or others may not necessary because this already have some legal regulations. Okay, so this is one side. There's some views from this say that it's not necessary. But on the other hand, for the REITs, it actually very special. Is normally we don't see quite a lot of takeovers or merge acquisition. It's happening at the asset level, but that doesn't happen frequently between two REITs. Okay, so it's normally one REIT will not consider to merge or acquire another one. So this actually will weaken the external monitoring on the CEO's behavior, because if you look at the US market, you can see the merger acquisition actually is quite very significant. It happened very frequent between the different companies, whatever private or public. Okay, so this actually the merger acquisition, all these the takeovers, external takeover, actually is a threat to the managers. So a way to discipline them. Okay, but in addition, there could be some others, let's say that evidence show that the managers in the REITs also manipulate earnings, even though it's mandatory that the REITs have to pay out most of the earnings as a dividend, but they still be able, there's still some room to manipulate. So my basically what I try to do here is, given a new list internal governance mechanism like a clawback policy, can we find out some evidence that this corporate governance, this new setting can generate some benefit to the REIT shareholders or can discipline the REIT managers? Okay, so basically I do three things. One thing is I first I'll try to find out whether there are some positive values to the this adoption. Okay, so this is the first time to adopt this policy, and then if yes, then through what channels? Okay, and then what could be the real outcomes after a REIT start to adopt these policies? Okay, so this is my data. Actually, my data set is first I collect a list of REITs trade in the US market, and then I get some financial statement data. And then the very important data is about the policies. Okay, this is a clawback policy. So I asked my student to search or download all of this annual report from the SEC, and then find out, okay, whether a company have this policy or not. Okay, and then I have two data sets. One is just based on the adoptions, that whether a company start to adopt this clawback policy. Another is a 4 years sample that for not only adopters but also non-adopters. Okay, so I will show more. Given the time is limited, I've just simply discussed that in addition to whether a company do the adoption, we also do some like linguistic analysis or linguistic analysis to find out the strength of the adoption. So this one is one of the pair of policies from one company. Okay, so it actually show very details that who are going to have this possibility to be adopted. Okay, the compensation could be clawback, and then at what conditions and how long, when. Okay, but another one you will see that it just very simple, just one sentence say that the company would have this policy, and we believe that the first one is stronger, the strength is stronger, and the second one is the strength is relatively weak. So we write some like use some linguistic analysis and then construct an index on this clawback strength, and then further divide a company into two, okay, weak and strong adopters. Okay, so we will anticipate that strong adoption probably will give some benefit if this mechanism can generate some real benefits. Then a strong adoption will generate more. okay, more benefit to the company. Okay, so due to time limit, I just show quickly introduce that up to now about 50%, okay, 50% of the REITs in the US, or more than 50% in the REITs in the US already adopt this clawback. Okay. And the first one hypothesis is simple: is we try to find out that whether these clawback provisions can generate some benefits. Okay, so I'm not going to discuss very detailed about logic, but simply is it possible that this policy could generate benefit because it could be a chance to limit some like optimistic behaviors in the managers, but it may not. Why? Because if a REIT is already very transparent or already have very strict regulations on its behaviors, then probably additional government mechanism probably doesn't help. Okay, so but we set a policy hypothesis here. It's auto adoption. It will have some positive market response, and then this response could be stronger in the a strong adoption. Okay, that could be some like detailed policy to show that when this adoption this policy can work. Okay, so we use the standard event study. Okay, but we look at the different model and look at different event windows. Very interesting finding is this column. Okay, so only strong adoptions can generate some significant market response. Okay, so this is the first one, and then we compare a strong and weak. We see that it is different. Okay, so in addition, we run some regression. We look at the strength. Okay, we'll see that whether a genuine adoption can generate more benefits. Okay, but again, it shows yes. Okay, so the second one is we try to find out a channel or possible channels that who are going to benefit more from this adoption. So we put our argument here is some REITs with a prior poor corporate governance, or they have some misbehaviors, they may get more benefit. The shareholder may get more benefits from the adoption. Okay, so this is a basic hypothesis. So I actually we need to do one thing. It's very important. Is how to measure the governance quality, and then how to measure the managerial opportunism. Okay, so we look at the different dimensions. Earnings quality, whether a company have some previous record to manipulate the earnings, or whether the company have very good reporting quality, or they have intentionally hide some information or in their reporting. Okay, or whether they have some improved decision. So probably I'm not be able to give more details on these variables, but the result actually is a little bit surprising. Why? Because we actually at the beginning we actually expect that a company, if they have some earnings management, they probably they will after the adoption, the market will expect that the benefit will be greater, but we don't find that. Okay, if you look at the earnings management inside a company, it doesn't show that a company with more earnings management will benefit more from this adoption. But we do find that a company that have difficult or more opaque financial statement disclosure will get more benefits. And then lastly is we don't see that there are some like aggressive or imprudent policies, whatever investment policy or financing policy, the company may not be get more benefit from the adoption. Okay, so I will skip this one because this is just compare the strong and weak. Okay, so last one is we try to find out the consequence of this adoption. Okay, so the ideal situation is after the adoption, the risk managers could improve their corporate governance, especially improve the financial reporting or quality, or reduce the earnings manipulation. Okay, and then some others optimistic behavior. So we use a different DID setting. So the interesting the variable is the second one here, this beta 2. Okay, this coefficient. So again, I just simply show the results. So our results show that this adoption doesn't have ability to curb the earnings manipulation in the REITs. Okay, but it improves the financial readability. So it's reduced some opaque disclosure. But a very surprising result is it reduced very significant, reduced the REIT investment and financing policy. Okay, so they invest less and they finance less. Okay, so this is a sample to show that strong adoption actually matter more. Okay, I'm not going to discuss much because I think that my time is just 20 minutes, so I'm already over time. So our conclusion here is the clawback adoption is important. It generates some positive response, but this positive response is only significant if a clawback policy is a true policy or can really have some threat to the manager. And then we find that actually probably just matters in improve the financial reporting quality, but it doesn't really reduce the earnings management in the REITs. Okay, but also we discussed that one thing that we will explore more is why the risk manager reduce so much the investment, okay, out of adoption, and then whether this is a good news or bad news to the a company. Okay. Due to time limit, I'm not going to give some details. So thank you again for Professor Lee to give me this chance to present my paper. So also thanks for the attendance. Okay.
Thank you, Professor Shen, for your insights of this very interesting institution arrangements. Actually, you can talk, say, about 25 minutes or more if you wish to give us more details. So now the floor is open, so I'm sure there will be some questions. Maybe let me take this privilege to raise the first question. Is actually I think it seems that the results shows that the impact is not very significant. So I'm wondering if other than say this type, I mean you are talking about REITs in the US market. So I think for stocks other than REITs, they have punishment, right?
Yeah.
But how about this kind of say misbehaviors? Say any types of punishment?
Okay, thank you for this question. So in the general market, in the general stock market, the literature just show that earnings management is reduced. Earnings management is reduced. So it's basically a company will try to improve their reporting quality. Okay, reporting quality, and one of this is to reduce the misreporting in the earnings, because misreporting in the earnings could be detected. If it's detected, then it will trigger this callback. Okay, it's possible. It's highly possible will trigger this this callback. So, but not many studies on the investment behaviors or like financing behaviors. Okay, so most of some of the study will show that after this callback adoptions, a company probably will become more transparent. Okay, the information will become more transparent. So it may help them to help the company to get more finance from the public capital market. But it seems my result shows that it seems it doesn't help in the financing. Actually, it's reduce the financing. But you know that financing and investment, this is the investment are very important for these REITs. Okay? Because basically, a company have to probably they have to rely on external financial market, because they are not allowed to keep the internal cash flows inside the company. They have to pay out as dividends. Okay, so the external market, external financing market is very important to REITs. But it seems that the clawback will make the managers very conservative to use the external financing. Okay, but you are right. This is also some comments from reviewers. So what are real impact? Okay, because it seems that our impacts, our results, especially the result and consequence, not very strong. So we still try to figure out that what are some other behaviors may be changed by this kind of governance setting. Okay, thank you so much.
Okay, thank you. Any other questions?
Yes.
Okay.
Hello, Professor Shen. Thank you for the lecture. Give us a lot of information about the clawback provisions in a mature market, which is in the United States.
Yeah.
I'm wondering that, as you know, whether the infrastructure REITs in mainland China has adopted such a provision in their corporate system, and would you give a comment if they do adopt it or do not adopt it?
Okay. Yeah, you actually asked a very good question. So as I know, no, because I think that for the U.S. market, this kind, most of REITs now is actually is managers by some internal manager. Okay, so they try to do some active management on the REITs. They would do a lot of investment acquisition or something like. So it's something like an open end that a REIT can change their portfolio. Okay, it's the same like the link in Hong Kong is the same that they would it can change. They can acquire a lot of assets from that even like Shenzhen or Guangzhou. Probably I'm wrong, but my feeling is for the most infrastructure REITs in China at this moment, some kind is closed end. So that means that they have some underlying asset. They have some like bridge, or they have some storage, some other infrastructure. It's just limited to that one. Okay, so that means that it could low small loan for quite a lot of the like managers they can do to like whatever to actively manage their asset. But of course, we'll see later there will be some like optimistic behaviors or optimistic behaviors. It's still probably in the Chinese market is another types of optimistic behavior. But I think that the major the importance of the infrastructure REITs in China is not only to provide some like investable assets for some investors, but I think more is for the financing for the local governments. So probably this is another way, other than the current local governments, they finance through the land mortgage, or through the land sales. Probably they will be able to, this is financialization, infrastructure assets. Okay, so it could be another source of funds for the government. But is this good or bad? I think that at this moment, at least overall, I think it's good. But there could be some problems probably later. Okay. Yeah.
Thank you.
Thank you.
Thank you very much. Because of the time, so we will stop this interesting discussion here. And thank you, Prof. Shen. And next, may I invite the second speaker, Professor Rita Lee from Hong Kong Shuyuan University, to give us her presentation. Her topic is elderly housing finance in Hong Kong. Professor Lee, the time is yours.
So thank you, Jane. So I will now share my screen. So okay. So for today, my topic is mainly about the elderly housing finance in Hong Kong. And then sorry that in my office, because today that they have got the fire alarm testing, so that they have got an intermittent fire alarm, but then hopefully it will not affect the whole presentation. So I will give you a brief introduction about like the housing financing, the elderly housing finance in Hong Kong. So which includes like the problem of like too large flats for many of the elderly houses because like the children left at home, and then aging in place, and then etc. And then the financial package for the elderly, some of the overseas experiences like the policies, and also the bankers' perception on elderly housing finance in Hong Kong. So mainly it's about like reverse mortgage part. So a lot of circumstances by the time we talk about like how to alleviate the elderly's financial housing burden, housing finance burden, then we would think about like, for example, downsizing. Is downsizing possible? Because actually originally they may have got a very large family, but then it turns out to be like small family because like children living home. And then however, many elderly people actually decline to move as the existing tenants that are treated as new applicants. And the housing side downsize does not imply a different decent allocation. For example, for the case of like, for those like private housing one, and even for the private housing one that they face more or less similar problem, that is like they have a very large size flat, but that they don't have a lot of money because they have already been retired for a couple of years, for example. Then moreover, the homes represent actually a combination of personal and financial security, family memories, and also well-being. So a lot of the elderly, they don't want to leave. And then nevertheless, if the house holds memories turns into a financial burden, like for example, physical strain, like exhausting maintenance. A lot of circumstances we have got the maintenance problem because the housing is like getting old. And then there's a financial drain or even become more spacious than is needed. The houses becomes glaringly impractical. So it becomes like something that is not practical at all. So the question is like, what motivates people to downsize? So elderly usually stay in home that is longer than the younger ones who need to work according to our previous research. They have the high requirements on the facilities because actually later on we will talk about like what facilities that they may need it. They do not need a home that is like what we live with a very simple one, but they need much more facilities that is needed. So if it's more houses is associated, like for example, with the better facilities like facility to shops, transportation services, and the chance of co-living together with their relatives, probably they may consider downsizing. But then a lot of circumstances, the elderly do not want to move because they think that even though they can have more money if they move to a smaller house, they think that it is not that spacious, and then they think that they cannot get used to a new environment. This is also another issue because a lot of the elderly they found that they actually that they pass away by the time they move to the new home, and then therefore some of the elderly they have got serious concern on this. Okay, and then so a lot of circumstances, as what we say, is aging in place is a best choice probably, because they actually age at the home rather than they just age in the elderly house. But then we have got a problem that we have got the extra financial burden. So we illustrate why. Now, elderly home that they need, like for example, they have to have like better like lighting, temperature control, ventilation. Because in a lot of circumstances, the elderly they have got a eyesight problem, so that they have to have like a brighter home. And then the temperature control is also important because the elderly they are not sensitive as sensitive as the younger generations, where they cannot identify, like for example, we have got a higher temperature or lower temperature, in particular in the winter time. You may find that there are some of the elderly who just die at home because they suffer from like low temperature at home, because a lot of them they have got a lower sensitive towards like temperature changes, and then the ventilation problem, and then it affects the elderly's living quality. So they have to have like much more better like appropriate building services that is needed for like sensory abilities deterioration. So under the circumstances, then they also need to have like some other architectural design that is needed to compensate the problem. Like for example, the flat's layout design, distances between like fixtures and also furniture. So although like for example, shorter distances within like residential units and their limited space affects the wheelchair users. So actually, for example, for the wheelchair users, they have to put the cupboards lower lower areas than the others as compared to like the younger generation. So barrier-free facilities like buildings, communications, transportation facilities is also needed within the whole building or within the houses in itself, that they have to like have the barrier-free facilities. Color use like enhances the elderly's activities, mood, good luminosity, contrast, and also visual acuity is needed. And then fixtures like cabinets that have to be designed for the limited reach. And then extra facilities like, for example, long slip flooring, handrails, and also like probably some of the smart gadgets, like for example that by the time the elderly do not move within a whole morning or a whole day, then there must be something wrong, and then the ambulance has to go there. So that it means that it is something for which they have to have like more like motion sensor, they have to have like door control, whether or not they have not left the home for the whole day, probably there's something wrong, thermostats, environmental monitoring, remote control, and then to remote monitoring whether the elderly's health and any force that it happened, and then some of the window controls to ensure that it is like that they have got a sufficient ventilation, etc. So all these things, it means that they have to have like extra expenditures if they want to stay at home, and then aging in place they take place. So smart click study involves like a balance that notifies the relatives or like 999 in case of an emergency for at home immediately. Some of the enhanced smoke detectors that is needed because they may cook, like for example, they may cook at home and then they forget that they have already cooked by more than an hour, and then they have to have something like smoke detectors. And memory, because they have got poor memory, so that we have to like remind us to turn off the coffee pots, lock the door automatically, etc. And the video monitoring, as said, that they have to like observe the elderly by viewing the video inside and outside the building. And then smart system, like they provide the dosage advised by the time that they need to take the medicine, etc. So that it means that well, all the things that we have to have, like it is like much more smarter one. And then probably robots is needed, okay, so that they have got like some of the robots like they can like move around and then take care of the elderly instead of like hiring a maid, or they may have got another maid but then this is a kind of robots. So that you may see that actually they have got a lot of different gigas that no matter it's a bathroom or in bed, like in bed, that if they do not change their postures for a moment, then probably there's something wrong as well. So that they may have got like this kind of smart home facilities that aid them. And then, but then the question is like, how do the housing policies, home care policies, like that they help the elderly, especially in terms of finance stuff? So we can see that actually all the stuff that we mentioned about like robots, no matter it's robots, no matter it's like smart home get glass, no matter it's like other things else, like for some medicine dosage taking, etc. All these, when we talk about like whether or not that we have that the elderly has got the sufficient financial subsidies that is like available, and then if they cannot have these kind of facilities, probably that they have to move to their elderly home, right? So a lot of circumstances, we also talk about like, so what actually are the housing and home care policies that can help the elderly so that they can have got extra money for the expenditure for the elderly housing. So we will first take a look at those like housing and home care policies in Japan, US, and also Singapore first. And then Japan, why we try to talk about like Japan, US, and Singapore? Japan is like very obvious. They have got a very huge population proportion-wise, that is in elderly over 60 years old. And then they have got like the US, Singapore, and the US also have got the similar problem. They face an elderly problem. That they have got a very large amount of the elderly, and in Singapore. But of course, we will just talk about like Japan first, because of Japan, I think every one of us here, we know that Japan is like one of the most serious aging population problem in Asia. So so that in Japan they have got a long-term care insurance where they have got like source of funding, that they have got the premium and some subsidies. So they have got like some of the premium that is for like 65 years old plus, and also some of them there is a secondary insured aged between like 40 to 64. And then they have got like different levels. So they have got national, prefectural, and also municipal level. And then they try to provide the integrated community care system that provides similar support among the housing, healthcare, livelihood services. So in terms of the elderly housing, we don't only talk about housing. We also talk about like whether or not healthcare is there, because we consider both the housing and also healthcare services. We don't consider one only, because it is a kind of like tie-in service. And then they have got a long-term, the act of the partial revision of the long-term care insurance that provides the housing for the elderly and promoting support for those with dementia. Because actually a lot of them, they have got a problem with dementia. Elderly, that they have got a very long age, that they survive, like for example, till like 90 years old or 90 or over 100. But then quite a number of them, they have got the problem of like dementia, and so that they have to have like this kind of insurance that can help them. And then they have got like in-home service, facility service, community care, based care, preventive care service, community-based preventive service. All these actually reduce the financial burden on those like elderly in terms of like in terms of the elderly protection. And then in terms of the care service includes like in-home service, because a lot of services, even if you hire a Filipino maid, for example, it doesn't help because they don't have the training for, especially for the elderly. And then they have got the home health service, daycare, facility service like intensive care home, long-term care, health facilities, some of the community-based service like home visit at night, to ensure that they're still alive, right? And then they care for dementia patients and small size and multifunctional functional in-home care. And according to level of the care needs, and users can choose the type of service and providers. So they have got a number of choices. They do not have like only one, and then you cannot choose. No, they have got a number of the care of the service and providers, and they either properly or privately managed. So types of the elderly housing in Japan, they have got like 6 types. So they have got like intensive care for the home elderly, like according to the Act of the Welfare, the Aged Long-Term Care Insurance Act. And then they have got some of their facilities for the elderly counseling and long-term care. And it's provided by the local government, special welfare corporations. And then for the second type, they have got a group home for the elderly with the dementia. So that this is for those like for like poor memory, so that they have got so that they've got some of the special type of the housing that is a share house for the elderly with dementia, and then operated by business. Because actually, Japan, they have got a very large population in elderly, so that they have got a wide variety of the provision, and then operated by the business as well. So they also have got a nursing home, and then there's a facility for the environmentally and economically deprived elderly persons, and it's provided by the local government, social welfare, and also corporations. And then moderate fee for home for the elderly, like care home, that they have got the aids for the welfare of the aged, and the housing for the elderly with the low income. And then usually this type of the housing is that of course they have to have some kind of like financial consideration. So they have to check your financial situation before they offer this kind of housing to the elderly. And it is established by the local government, social welfare corporations, and corporations approved by the prefecture. And the fee-based home for the elderly, that is like housing for the elderly, and then operated by the business corporations. And this is for those like they have no dementia, and no very special kind of like healthcare problem. And then for the 6th type, there's an elderly housing with care service. So that they have got a state, so that this one that is also for the housing for the elderly and then business corporations, but they are of the larger size. You can see that it's just like almost double the previous one. There's a 25 square meter. So you can see actually they have got like the average dwelling is like different for the cater different needs of the people. And then the one with the dementias, they have got the smaller areas to avoid that they hurt themselves, for example, so that they have got a relatively smaller area. And then they also have got a loan for the elderly, the professional loan for the cohabitation and nearby living funds on family basis to facilitate the co-living environment with the elderly. And then in Singapore is just like they try to link with the social issues. So the policies are actually implemented to encourage like intergenerational co-living, because actually this is the best way to take care of the elderly, where the kids take care of the elderly, and then they do not need to have got a separate like elderly home, elderly houses. And because majority in Singapore they are Chinese, so that they still have got a kind of sense of like they have to take care of their parents by the time they get old. And then the priority for the parents and married children to buy the new HDB, the Housing Development Board flats to live near or like live together. And then so that in Singapore, they have got a building a robust home and also community care ecosystem to support the seniors to age in place, includes like expansion of home care services and the senior centers, which keep the seniors in community, and the dementia prevention program being launched by like National University of Singapore in partnership with the with some of the society. And that is an example that they try to partners with the society, and they try to push back the needs for the seniors from like hospitals, nursing home, because actually hospital and nursing home is not a good way to take care of the elderly in itself, where they are not where actually they are not like home like environments, not aging in place. And in the US, they have got like a different kind of the houses that are provided, like adult retirement communities, accessory apartments, assisted living residence, etc., etc. And then for the ALC one, they provide those with the active independent elder people. They have got a common area in maintenance and the many activities. No, that this kind of housing that they're provided to those with no extensive medical or necessities, like a small town. So this one is very common in Taiwan as well. If you go to Taiwan, they have got something very similar. If you go to Japan, last time I go to Tokyo, the hotel nearby, they have got something that is similar to the adult retirement communities like this as well. So for the home sharing, it is actually a living environment with arrangement of like in which like 2 or more unrelated people that share the common areas of the house, like for example, living room, kitchen, bathrooms. But then each person they have got a private sleeping place. And then for the accessory apartments, they have got like a kind of like mother-in-law or granny flat, where they operate due to the popularity with the aging parents, and then the children usually they just close relatives they occupy in the same occupy one of those structures, so they live together. And then for the assisted living residence, where there's a special mix of the housing, personalized support, and healthcare. So staff is available 24 hours. Of course, they have got a this I for the design for those that need to have got some of the like supervision of their medication, the mental health services that is needed, so that and then there are also some of the AFC facts, the adult family care, where the elderly are no longer able to live alone, so that they have got this kind of intensive care houses. So in case of Hong Kong, going back to Hong Kong's scenario, one of the things for which the Hong Kong they provide best to the elderly is actually for the reverse mortgage. Of course, we have got a lot of the elderly houses, but the elderly houses are operated by the private one is just like sometimes somewhat is like notoriously infamous for like poor services. If you remember like the case of like Oxford and also Cambridge elderly houses in Hong Kong, it happened 1 year ago or so. And then therefore, actually, for the main aging population problem policies is a reverse mortgage in terms of the finance side. And then, however, the main problem is about 72.9% of the elderly mentioned that they will not consider joining reverse mortgage by the time it was interviewed. And then education levels of the residents is an important factor that affects the decision on the reverse mortgage, because some of them they actually cannot understand what actually is reverse mortgage. There are a lot of the documents, there are a lot of contracts, terms that the elderly cannot understand. And then the value of their currently owned housing unit and family structures are important factors in consideration of the reverse mortgage. Bankers' consideration is very important because they think that, well, by the time I pass away, I can actually leave the house to the children, right? A lot of people they buy houses is not from themselves, it's like for the children themselves, right? So that is like a main consideration. And then for the RM policies in Hong Kong, they allow those like age 55 above to try to use residential properties in Hong Kong to obtain reverse mortgage loans, and they can receive the monthly payouts like over a fixed sum or throughout his life. And the borrower can borrow the lump sum payouts for like, specific purposes. Like for example, buying all the smart home gadgets is possible. Like have got a much more like tea, dinner, etc. better one that's possible. And in general, the borrower does not need to repay the reverse mortgage loan during his lifetime, unless it is terminated under specific circumstances. So when the reverse mortgage loan is terminated, the property owner and his personal representative will have the preferential right to redeem the mortgage property. And then, but then most of the circumstances, by the time they obtain the reverse mortgage, a lot of circumstances they do not have like children actually a lot of circumstances they don't have children, and therefore they try to join the reverse mortgage. But then if there's any shortfall, they can be borne by the HKMIC under insurance arrangements between the lender and also HKMIC. So any surplus will be passed to the property owner in case of the elderly pass away, probably that the children get hold of it, then the surplus can be passed to the property owner. So this is basic summary about like eligibility criteria. So of course they must have got a residential property in Hong Kong, and they're owned by like they have to be owned by them. and then not exceed like 50 years of age as low as you can see that if they have got like another, like for example, now they are at the age of 55, but then the houses is like 50 years of age, they still have got like 40 years of time that the houses is like 90 something. So that is not possible. So therefore it must not be exist like 50 years of age for the houses in the South, and not subject to any restrictions, etc., etc. So how do the bankers perceive like elderly housing finance? For this research, we actually also asked about the bankers' perceptions. So they consider there should be like some kind of a gray hair insurance product. So they consider like insurance product is very important. Gray hair bonds, this should be there like more than 1% of interest than other bond products. And then annuity from the insurance companies is possible, like pay a fixed amount before they retire, and some of the medical insurance. But then usually for the medical insurance, they are bought by the time they are young. So for the elderly policy, is not like stick to the old age only, but then it should be like considering the young age as well. And then reverse mortgage that provide a solution for the elderly home's financial problem. But then this policy is quite controversial as said. They have a lot of people that say that they have like, if they have got children, they cannot like, that is not really useful for them. And then regarding for the recommendations for improving the current reverse mortgage, they say that it should be like adjusted with the amounts that payment that should be adjusted with the inflation instead of the fixed monthly income now, and more promotional and advertisement should be like conducted. And then a lot of them, they also mentioned that there's a slow process in application approval, because actually they have got a very long procedure, lengthy procedure. And then the age of the property that should be under 50 years should be removed. However, there is like a major consideration is that a lot of people that are getting longer lifetime spans. So this is like kind of like question there. The standard asset requirements are 30% of the value of the unit to buy the insurance, and the insurance price should be like both set lower according to the individual. So some of the elderly people aged above 70 may not clearly understand the nature of the reverse mortgage, and even for like finance, the one like is who is like teaching finance, unless we do research on this area, that a lot of us we're not very clear about that as well. So it suggests that some regulations like compliance regulations should be in place to protect them. On the road, customer policy should be there. So they try to like have got another person, they try to listen to the whole policy and see whether or not that there's something that is not favorable to the elderly. So if the elderly people with like age about like 65 with primary education or below and or knowledge barrier, research should engage in the financial investment that must be witnessed from the bank and other provided by the applicant. This to verify the process that at the time the elderly person makes the decision on the financial product, they must have got a clear mind and know what exactly the product is. So banks have a very no incentive for promoting the reverse mortgage, because actually this is a kind of like voluntary product, so they don't have got incentive to promote. And then banks cannot make huge profits and then by like making the reverse mortgage. And then due to possibility of conflict of interest, it may not be appropriate organization to educate the people about like what actually is reverse mortgage. So actually some people suggest like NGOs, district councils, private estates, owners committee, HKHA, or like public libraries, and even like hospitals, because the elderly always goes to the hospital, should be a valid channel to provide more information about what actually is like reverse mortgage. And then so that this is a suggestions made by the bankers. So here is the end of the presentation, and then for more details you can actually contact me in this email, and then see if there's any question from the audience.
Okay, thank you, Rita, for a very informative presentation. Any questions from the audience?
Hi.
Hi.
Hi, Professor. May I ask a question about, because I noticed a phenomenon that in Hong Kong, many aged caring homes, they're located in some low-income districts, or at least in some districts with not that high average income.
Yeah.
So I'm wondering, is it because of the social attitude or financial reasons? Could you comment if that we improve the facilities as what you suggest in the in just now in the lectures you mentioned? Would this phenomenon get improved or say get better? if we improve the facility.
You mean that it is like, is it like improving facilities can help? Sorry.
Because I noticed there are many nursing home or say aged caring communities that are located in the district with low average income.
Yeah.
I'm wondering, is it because of the facilities reasons or social attitude reasons or financial reasons? Is there any ways to change such a phenomenon from the facility management aspect?
Well, actually, I think for the elderly houses, like a kind of in Hong Kong, the elderly houses is like sort of like notoriously infamous for their facilities, poor facilities and poor healthcare services. And then because, like, for example, if we talk about the cost of running the elderly house, especially for what you mentioned about like the low average income one, it is like it is usually subsidized by the government, but the subsidized by the government is not a lot as compared to the cost in running these elderly houses. Because if we talk about like they are like for the elderly, we have to have like nurses that is staying there for like 24 hours, theoretically speaking. And then we should have some of the nurses who can take care of these elderly. And then these elderly, some of them, they cannot take care of themselves because for those who stay at the nursing home, to be very frank, a lot of them, they have already lost their ability to take care of themselves. So it means that they have to have like very intensive care by human being, not by like robots, okay? And then this means that the cost, however, the cost can be very high because if we talk about the elderly house nowadays, it is not a very good job working environment for the younger generation. But then for the very old one, they do not have sufficient they do not have sufficient force to take care of these elderly, that you have to like carry them from like bathroom to like back to the room, etc. So it means the cost of running is fairly high. So that for the elderly home in itself, actually it is not. It has got a very high cost but low profit. So ultimately, the service is like very poor. Those like Cambridge incidents, those like Oxford incidents. I'm not sure whether you are aware of that. And then therefore, it is not a good way to like. It is not very good for like putting them to the nursing home actually. And then the facility is like it's not good. Even though now it's better because they have got subsidized like providing the robots to them. But to be very frank, taking care of the elderly is not really useful in terms of like you just put a robot there and the robot remind them to take the medication, take medicine. Other than that, well, the usage is very limited. And then more like it's like experimental side rather than it is so practical that it is used all the way through. Yeah.
Hi, Luita. I'd
Hi.
like to. Hello. Nice to meet you again. So I'd like to. I'm not sure whether you have some data about how many elderly population in Hong Kong, and this is the first question. And the second one is, it seems to me that those elderly people, elderly who can live in this elderly house, is already have some financing ability. They are some. Or some of them probably, or some of these elderly people probably cannot even afford to live in this is not so good conditions. So how large are the population about that? Do you have some data, or do you have some?
You mean how many of them they are much more wealthy and then they can live in the better elderly home, or?
No, I asked that how many of them cannot even afford to live in this elderly home, even though they are not quite good.
The elderly home, they have got two types of them. So one is like operated by those like for the low end one. And then that means that they do not have, they actually rely on the subsidized from the government, even if they do not live in the elderly home. So this type of the elderly home that they are 100% paid by the government. And then, but then this kind of elderly home, usually they have got a very poor service. And then they have got another type, of course, that we have got some of the elderly home that is like very fancy one, very expensive one. And then this one, of course, is like somewhat is rare because of the fact that, well, if you imagine that they have they can pay a lot, okay. So why not they have got, like, for example, 4 or 5 maid take care of the one elderly, right? So this type of the elderly house is like very rare. But then usually those who go there, like they may have got dementia, or they have no people who can take care of them, like they have no kid, and then and therefore the proportion of the elderly in Hong Kong is about 1/4. It's about 1/4 in Hong Kong that is like they enter to the age of like over 60 years old. So that means that there is a market there. But the question is, like, a lot of elderly, they have no job, they have already retired. So you cannot imagine that they can spend a lot of money on like elderly homes. So it's a kind of like dilemma. They have no money, but they should stay in the home with a lot better facilities.
Okay, thank you.
Yeah, thank you.
Thank you for the discussions. I'm aware of the time, so thank you, Rita, for your views. And next, may I invite Professor Liang Cong from Open University Hong Kong to share with us. His topic is private land use for public housing projects, the influence of a government announcement on housing markets in Hong Kong. Professor Liang.
Thank you, Professor Lee. And let me share my screen. Yeah, can you see me? Share my screen, yeah. Okay, thank you very much for inviting me to this symposium. I am Liang Cong. I'm from CUHK. Today I'm going to show you the topic about private land use for public housing project, the influence of government announcement in housing market in Hong Kong. Well, this would be the piece of sections I would like to share with you here. Consists of 6 parts. First of all, spend some time on discussing the backgrounds in Hong Kong, and then we come up some of the hot topics related to this topic, and therefore spend some time to discuss the research method, data, and arrival, and finally address some of the result and conclusion. Without further ado, let's jump to our first section, the background of Hong Kong. You can see that in the center of this slide, majority of the land are covered by the green color, and some of the audience may shock or surprised to see that is it the real picture, real case in Hong Kong? Yes, it is. So let me elaborate some of the key statistics so far. The population in Hong Kong up to the late 2020, the December 2020, is around 7.4 million. And the total area, of course, is not that small, 1,106 square kilometers. However, 24% of them, around 268 square kilometers, is available for city area. And while the rest of which around 72% are for the green and reservation purpose. So it means that we need to accommodate 7.4 million people in 268 square kilometers area. Do you think that is reasonable and legitimate in long run? Of course not. And most of the people, of course, the Hong Kong people would like to persuade Hong Kong government will develop the green land or the reserve land to develop some sort of housing, but this is not possible. Of course, some of the environmental protesters would come out, would show a lot of the reason against the action. That's why the topic I would like to present to you here. The Hong Kong government have to compromise. So, based on this fact, let me show you some sort of the information from 2 sides, private housing market and public housing market. You can observe here that I collect some of data from the Rating and Valuation Department of Hong Kong from the year 2000 to the most up-to-date, the April 2021. And Hong Kong housing price skyrocketed to 319.8 in April 2021. It's quite high, right? Comparing to 10 years ago, 170 in 2011, rising over 129% in the last 10 years. It's quite short, right? That's why the other the director of the Future Cities, Professor Fong, would like to use the word skyrocket, which is quite similar to mine. And the second issue is, when comparing to the median income level in Hong Kong in last 10 years, only increased 53%. Well, it is quite narrow, far more narrow than that of the housing prices, in the last 10 years. So if we did some simple algebra by using the median income divided by the housing prices, we can actually compare to the other well-developed cities such as Sydney, San Francisco, Tokyo. It's not hard to find that Hong Kong is far more behind than these three cities. And Hong Kong is also known as the top cities of the least affordable, in the world. And yeah, Hong Kong government, of course, seeing this scenario, will not, of course, let the market freely and without any directions. They actually launched 4 rounds of the stamp duty to cool down this market. Of course, the actions are actually would like to suppress the demand side. So what should we do? Actually, just look at the dashed line showing you on the right-hand side of this figure. 4 rounds of the stamp duty. There are special stamp duty, which is launched at late 2010. And then the buyer stamp duty around 2012. Then later, the double ad valorem duty. The most recent one is called the new residential stamp duty. 4 rounds of the stamp duty have been released, but we can observe the market price index still keep rising. We don't have any signal stop, even though we can observe some sort of slightly drop, but the overall trend is keep rising. So we all have all hands high here at the moment. But here is just the parts of the private housing section. Well, from the other round, let's take a look at the public housing. Public housing still meets the problems of short supplies. And the time to wait for the public housing extended from 4.7 years in 2017 to 5.8 years in 2021, which means this is the average level for the household. If some of the Hong Kongers are single, they would have to wait for even longer, at least 10 years, to assign tiny little blocks or units for living in the long run. So this is we call it a nightmare in housing supply in Hong Kong. If we observe that the demand side does not work, why not just consider the supply side in the housing problems? So the Hong Kong government decided to cite land's resumption audience and launch a new housing initiative in June 2018. That is to relocate the private housing site for public housing. And of course, this announcement is 3 years ago, but in recent Hong Kong government press, the chief executive, Carrie Lam, put forward a proposal to adopt a more focused approach for rezoning private land for public housing development, and then exercising public power to resume private land for public purpose, which means a lot more land, private land, will be used for public housing project. And that motivates me to carry out this research. I'd like to ask 2 questions, which simpler to most of the Hong Kongers in our city. The first one is, how does this announcement would affect the home buyers search behavior in the market? The second one will be the interest questions among all of us. In what way should the new public housing be developed, if it is possible, to be compatible with the host neighborhood? Whether it should be followed the traditional mode by the developed as the home ownership schemes, or should invite the private sector to participate the public housing development. We don't know yet. We hope to use the existing data to generate some sort of useful findings to inform Hong Kong government in the future. So I will follow these two questions to carry out my literature review. First of all, let's take a look at the search behavior in Hong Kong. Of course, if we just talk about search behavior, it's ideal we can observe the real data, whether the potential home buyers would have a full records to visit different kinds of the website, different kinds of agents, and it's ideal. But the truth is we cannot because of privacy, because availability of the information. So we have to rely on another, we call them the indirect variable. It names as time on market. It refers to the duration of the property until it is sold. Traditionally, in the housing literature, there are lots of literature focus on this issue, mainly studying the relationship between housing price and the time. Most of them only focus on how price affect time and time affect prices, but very few focus on how housing policy focus on impact on time, actually. And more importantly, a rich set of literature studying the home search behavior in US, UK, and Western countries, and very few located in Hong Kong and in Asia, in China. Why? Because the data is not available in previous years. So hopefully there are a lot more will be generated in the long run if the data is available. So the second issue we talk about is about the relationship between the public housing and private housing. And for this topic, not many studies in this field have been well discussed. Yes, similar to Tom issues in housing literature, there are a lot focus in US and UK market, very few focus in Hong Kong. And most of it, of course, generates some sort of, different, findings. For example, previous findings found by Allen in 2007, that positive, negative, and even the mixed effects of the public housing would impact the private housing value. So the conclusion from the past literature is no consensus agreement as regards the impact of public housing on private estate value. So this motivated me to continue to carry out this research on tackling how we can use the past information about the private housing to impact the private housing value, public housing, forgive me. And later, because at the former slides, I mentioned that whether the public housing should be built up by following the traditional mode, which is the home ownership schemes, or invite the private sector to participate. Of course, these two schemes is not new, of course, and they are already been introduced in the late 1970s. Under home ownership schemes, construction and sales of the home ownership schemes flats are operated by the Hong Kong Housing Authority. And eligible applicants are mainly tenants living in the public rental housing. So very small, people, small size of people can qualify for this, application for the home ownership schemes. Even they got rich, they remain living in public housing, public rental housing. And of course, most important one we are concerned about is the sales price of the home ownership schemes are set between 20% and 50% of the private housing flats, depending on the market level. This will be fluctuates. It's not just set as a fixed level among the in the last 30 or 40 years. So as we take into account the PSPS, it's definitely complementary schemes of HOS, is essentially a public-private partnership scheme. As in the PSPS project, both private sector and public sector work together to generate this kind of product to the public. And the most different part distinguished to HOS is PSPS the Hong Kong Housing Authority take advantage of the resources from the private sector to design, build, manage the flats for the eligible candidate. And the private sector showed all courses, capital courses, which means to pay the land premium to support the PSPS by have the right to develop the projects by cooperating with the public sector. And finally, the public sector will purchase a great number of the PSPS flats at guaranteed prices, and this motivates most of the, a large part of the private developer to enter in this field because they have lots of the benefit by selling the non-domestic flats to the public. Okay, having finished the literature review, let's jump to the data variable. I would like to first of all use the visualization method to plot every single unit of data into the map here to showcase how this data are collected and where they're distributed and which part I would like to focus. First of all, let's take a look at the area highlighted in blue. It's our study area. It's the East Kowloon area. Why study this area? Because this is area the first new housing initiative would like to reallocate private land sites for public housing. So I choose this part based on the government's files or the ordinance. And the other parts are the other areas, the 3 areas in Hong Kong. So I would like to negotiate before because I believe most of the people, most of the audience here are very familiar with Hong Kong. I mean, the lands around the districts. And the red dot located in almost every urban areas in Hong Kong are the private properties I collected from the private agent firms and I591.com, and it is definitely the most useful one for me because it not just document the housing transaction price, but also the most useful one, I believe, when I just mentioned about the time on market information. This is truly the very one website I can download the information, while the other private agents information cannot have such kinds of resources. The green one is the private sector participation scheme project located in Hong Kong. And of course, it's not as many as the red dot private sectors because it's a part of the, the public housing project. While the blue one is a home ownership scheme and is a little bit greater than that of the private PSPS. And the distribution, you can see here is almost covering every corner in Hong Kong, but the time span I collect the data is not that long enough, only from the August 2016 to May 2029. Why? 2019, why? Because in June 2019, we experienced a social event. We believe that such kind of event will have some sort of negative impact on the property market. So we wipe out the part, only left this 3 years data in our study. So let's jump back to the descriptive statistics in our study. I use a lot of variables here, but we focus the variables highlighted in red. The first one is Tom, of course, to tell market of property. Second one is PSPS and the HOS. I use the measure of distance to the nearest PSPS schemes and HOS schemes rather than use the dummy variable to take into account their truly distance. Because distance in housing literature is far more useful to measure the true impact on the housing value. In other words, I treat the PSPs and HOS as some kind of urban amenities or neighborhood amenities, which would cause them negative, positive, or mixed effect. I don't know yet. So I would like to take this into account based on the past literature. And the policy here is about the time impact. It's a dummy variable, definitely. If the transaction of the property performs after the announcement of a new housing initiative, it will be denoted as 1. Otherwise, 0. CUHK is short for this color, which is corresponds to the blue area in previous slide, just here. It's a study area. If the transaction can appear or observe in this area, it is denoted as 1, otherwise 0. While the other variables are set as the control variables. And the price here we use, we take into two, the price term. One is transaction price, the first one. The second one is asking price. I will tell you more about why I incorporate these two items. And I would like to share with more about the TOM here, TOM market. You can observe that the mean value is 31 days for each transaction, which means if you prepare all your information, upload on the agent's website or hand over the information to the agents in the office, you can make a deal within a month. That's quite shocking to me. I'm really surprised. And this would coincide with the fact that in the previous slide, why housing price skyrocketed to 319.8 after this moment. We don't have any signals to cool down, and because we are still in rigid demand in the city. TOM is an indirect effect, and to measure the search behavior. So, having noticed this information, we would like to talk about the model used in this study. At the beginning, we addressed two questions. So we will choose two models to answer these two questions. For each model, we'll answer each question. The first one is TOM model. It targets to answer the housing search behavior response to their new housing initiative. I use two equations. First one is the spatial, lag model, which is in general form. The second one is about the asking price. Why I need to use these two model, I will elaborate more. The first one, of course, I will incorporate the TOM and price. In the past literature, price and TOM are the twin brothers which generate some sort of endogenous effect. In the US and UK literature. But in our data, it will not have such kind of effect because TOM is not the time period for each bargaining process between the home buyers and home sellers. The TOM here, as we show in the previous slide, is the early stage or the initial stage when the home seller would like to upload the information, the property information on their website. Well, the true meaning of the TOM in our study is the one-stop. You can only see that the final deal, the final transaction is finished, finalized. It's the kind of information rather than those information we observe in the US and UK market, rounds and rounds of negotiation, and TOM is also measured the rounds of the negotiation period between the home seller and buyers. And therefore, we would like to use the second equation, the asking price set by the home sellers and expected asking price or the equilibrium market price that the market would be accepted. This discrepancy, we call them the theta, or we can estimate it through using this term, using the second equation to estimate the estimated error to acquire this kind of signal above market price, and use this kind of information substitute back to the equation one. We can have the discrepancy between the design level of the market prices the home seller would like to sell and the expected or the equivalent prices the market will meet. This kind of discrepancy will affect TOM rather than TOM affect this kind of above market prices. And second one model I would like to use is about the pricing model. It's quite different than the first one. Of course, it's not that kind of the the first model, because this one we will not consider the policy information and the districts. Why? Because the project is still in progress. It still needs some time to finish, so we can only use the existing information about the PSPS project and the HOS to generate some sort of useful information to inform the government what they can build the public housing to be more compatible with the neighborhood, rather than to detect or investigate the true impact to the neighborhood. So these two models treated as two different functions in our city, or in our paper. And okay, I will gear up the most of the parts and talk about the model result. Here is the two results, the OLS and the spatial model or Tom model. Why I need to consider these two models? It's quite simple, because I just want to assign spatial model in my study. But the truth is, if the data does not meet that requirement, I should need a robust text or need some sort of evidence to prove that the spatial model is legitimate in my study. That's why I conduct a series of the spatial text based on my previous paper, spatial econometric model selection framework. You can observe that the figures highlighted in red are more aligned with text. We first of all conduct the more aligned text showcase you the data embedded within spatial dependence. And secondly, I will focus more on the Lagrange multiplier text. 4 of the texts are significant, which means we can have some sort of solution that conclusion that they have the spatial dependence. But based on our framework, we only compare this final 2 Lagrange robust text that the lag model is the legit outperforms the others. And while the other one, similarly, the pricing model, we also observed that the lag model outperforms the error model. So here we will choose the lag model to present the green findings. I will skip this part because based on the realization pace in the spatial econometrics, we will not use the spatial models estimation result as the model result to present the findings. What we would like to see here is to generate so-called the indirect, direct, and total effect in our paper to present our findings. And we would like to address the key findings here, and the policy, which is highlighted in red, and also the policy terms, the EK. They are both significantly negative, magnitude, showing you the policy after policy announcement, the search behavior is more active, which means the transaction of the housing will become shorter. Well, for the spillover of the pricing, the most interest variables are PSPS and HOS. And yeah, we find that PSPS is not significant, which means if the public housing is developed by inviting the private sector, it would be compatible with the host neighborhood. Well, if those private property located near the home ownership schemes, they will have value of depreciation by 6.7%. Yeah, and okay, my conclusion here, yes, it's simple, and we studied the impact of announcement of new housing initiative on housing behavior in Hong Kong. We cover this issue from 2 perspectives. One is the search behavior, and the other one is how to develop the public housing should be compatible with the host neighborhood. And our major finding is the announcement will lead to 5% changes in term for private housing in Kowloon. Well, people from our past information transaction records in Hong Kong, they would like to live closer to PSPS rather than HOS. And final addresses should seek out more land resources, sustain the long run, housing supply, rather than reallocate the private land side for public housing. It is not, the legitimate for long-lasting problems in Hong Kong. And that's the end of my story. Thanks for listening.
Thank you, Professor Leong, for your in-depth analysis. I already see questions raising in the chat box, so the floor is open for some discussion, privately sent to me. So.
Okay, may I ask a question?
Okay.
Thank you for your presentation. And I have 2 questions. And the first is, you have mentioned 2 public housing models in Hong Kong, and one is HOS and the other is private involved PSFS model. So I wonder if there's any difference between these 2 models in terms of building construction characteristics. And the second question is, under which circumstance would the private sector involved model be introduced and preferred, given this situation?
Okay, thank you for your question. It's a little bit challenging, of course, and your questions are really insightful. And yeah, let's go back to our model. It's, these 2 models seem like to be so similar, but they're not the same actually. The first one, as I mentioned, the search behavior can be measured. I mean, when the announcement is available in the market. While the second one, we cannot truly investigate the impact of the announcement on the private property value, because the reason is quite simple. The second one needs the physical property located in this, the study area to estimate the true impact of its influence on the community or neighborhood. But the project is that they are still in progress. So I may need some time to actually wait for its accomplishment. Yeah, that's the major issue. Well, the first one, the differences I used to, steps to estimate this part, because I tackle the so-called endogenous problems, which arising from the term and the property price. And this will be a little bit difficult for some of the audience. Maybe I speak a little bit fast just now. For the second question, hopefully my presentation is clear to you. For your second question, the PSPS, your questions is quite insightful. I would like to address more because I treat them all as one, category, rather than just split them out into more categories in the near future. Your suggestion provide me a new some sort of direction in the near future to tackle this problem actually. Because this information, the PSPS, I just look up this information from the Google and from the Housing Authority's website and also the Wikipedia. So I cannot say how to divide or how to take out more based on this information after this moment, because everything here is up to the past information. I still need some more time to dive deep more into this project. So hopefully we'll give you the answer.
Okay, thank you.
Can I ask a question? Hello, Professor Liang. Probably because you following up the previous question, probably you can look at the I don't know whether there's some property price for this PSPS or like the home ownership scheme price. Probably have. If have, probably you can compare directly from the property transactions to show a little bit whether they are different or not. So this is one of my suggestions. But another thing, my question is, I want to ask, do you know exactly the rules the government, Hong Kong government, choose the site for this ownership scheme and the PSPS? Do you know that is there some rules that the government will choose, like, okay, this site I will going to use as for this scheme, or I will choose some other sites for the PSPS? So I ask this question because I think that one another endogeneity is the selection of this the HOS and the PSPS. Probably you can think more about this. Okay. Yep.
Okay, thank you, Professor Sure. Yeah, for the price of for the first question, you mentioned about the price of the PSPS and XOS. I believe you can observe this information in the Housing Society's website. They document every transaction records of the public housing, including the rental and the home ownership schemes. But the most difficult part, of course, you need to identify which one belongs to PSPS, which one belongs to HOS. I don't know. I haven't done it. It's a time-consuming process, of course, but it's quite meaningful for your questions. I would like to go deep inside later on, of course, to see how these two kinds of property showcases the market information, and who are willing to buy based on the price of information. Well, for the second one, your question is right, rather constructive and meaning. As was suggested, we can help us to recommend the government what sort of the housing should be built based on this analysis. And up to this moment, I can disclose the information to you is government still thinking, still under construction, still under planning how to build the public housing rather than address the solution to them. This is from my understanding based on the market information, rather either follow the HOS or PSPS, but from the perspective of Hong Kong government, they are still waiting, they're still thinking rather than doing something. So we may need some time. If they accept my invitation, recommendation, it will fine. But if they promote another kinds of the development strategy or schemes, I will follow up. Thank you.
Okay, thank you for the fruitful discussion. I can see potentials for more policy implications in the future to solve our city's problem. Because of the time limit, so thank you, Professor Leung, for your presentation. And our last speaker in the morning session is Professor Fan Ying from the Hong Kong Polytechnic University. Her topic is overconfidence and bankruptcy risks, evidence from mispricing in housing transactions. Professor Fan, the time is yours.
Okay, thank you for having me here, and good morning, everyone. The paper I'm going to present today is Overconfidence and Bankruptcy Risk. This paper is co-authored with Sumit Agarwal and Tim Fusin from National University of Singapore. So we are taking a special look at the overpricing and the underpricing behaviors in the housing transactions, and to see its further impact on the bankruptcy exposure using Singapore as an experiment. So we know that bankruptcy is a very adverse event and could have very important implications to consumer welfare, to the banking and credit industry, and also the public policy. So the current literature, they establish conceptual frameworks to explain the bankruptcy. The first explanation is a strategic motivation, which is especially true under a very forgiving bankruptcy system with a reduced social stigma. So in this case, the individual, this is purely an active decision. So the individual, they can decide whether or not to file a bankruptcy or which chapter of the bankruptcy law to apply for. So because it is an active decision, then the bankruptcy outcome could be planned in advance to get the benefit of the discharging all the accumulated debts. So along this way, there are very abundant literature establishing theoretical frameworks to explain the strategic motivation and highlights the important factors such as degree of the financial benefit they can get from discharging all the debts, and also the frictions and exemption levels in the bankruptcy filing process. So actually in our actual life, apart from this strategic motivation, actually a lot of bankruptcy, they are actually staggered by this financial distress, which means like for people, they have accumulated high level of debts, and then they are very sensitive to some negative income shocks, such as the unemployment event and unexpected medical expenditures, and even the COVID situation. And this type of the financial distress channel will be further boosted by this easier access to the high interest loans, such as credit card loans or payday loans. So this is a mostly common cited explanation for the bankruptcy outcome. And we actually in this paper we review additional channel which called the financial overconfidence. This is actually in consistent with some financial literature focusing on the corporate finance and also the gamblers' behaviors in the casino. So this financial overconfidence channel actually indicates that when people, they are lack of the self-discipline, they will be very aggressively engaged in the high risk taking behaviors, such as overspending, the credit card abuse, or the risky investment when they experience some positive income shocks. So we are going to look at this channel, and the current study, because of the limitation in the data, they cannot examine this channel. So we are going to fill this gap. And our paper is also naturally correlated with another branch of literature on the connection between the housing credit and personal bankruptcy. So Mann and Sufi in their AR paper, they highlighted that housing credit could lead to excessive debt and the mortgage defaults. So in a very similar setting, Agarwal and Song, they find that when the government increased the loan to value ratio limit from 80% to 90%, then the bankruptcy risk will be increased by 0.2 percentage point. So this story is actually going in line with the financial distress channel. And we know that mortgage debt actually has dual roles. So beside this financial burden, this debt burden, the mortgage debt could also serve as a disciplining device for the borrower to accumulate their home equity with a monthly payment. So when they are lacking in such of the disciplining device, then the financial overconfidence channel will be just boosted. So the story we're going to discuss today is that mispricing, either overpricing or underpricing, will have a positive shock effect to the bankruptcy outcomes, but from different channels. So for the overpricing channel, which is actually in line with the financial distress channel, which means like if you pay significantly higher than the market reasonable price or the underlying value of the property, then you are actually facing a negative income shock, and you are actually facing a high level of debt burden. So you are very financial vulnerable, and it will be very easy to file a bankruptcy later on. And there's additional channel called overconfidence. So when you are actually paying significantly lower than the reasonable price or the market level price, then you're actually experiencing a positive income shock. And then due to the lack of self-discipline, you'll be very aggressively engaged in high risk taking behavior, and then you will have a higher probability to file bankruptcy later on. So the key research question in this paper, first of all, is a who question: which type of the individuals actually they are associated with a mispricing outcome, and then through which channel do the overpricing or underpricing outcome will have an impact on the later on bankruptcy filings. And then we take a step forward to look at the policy effect to test the causality, which is whether the loosening housing credit or easing bankruptcy cost could deepen the asymmetric impact, as we mentioned before. So our data in Singapore will enable us to connect the housing transaction records and also the bankruptcy filing record, which is very great. And beside this, we choose Singapore for some institutional reasons. So first of all, this is the in terms of the bankruptcy outcome in Singapore. So the mandatory and non-mandatory bankruptcy cost in Singapore is systematically higher than other economies, and we will later on in the institutional background section we'll get more into information on that side. So because of the high cost upon bankruptcy, there's a very weak strategic motivation even among the salvage debtors. So it provides us a cleaner environment to study the financial distress and financial overconfidence channel. Then the second benefit about Singapore institution is that all of these current transaction record and also the historical transaction records in the private housing market, they are free to public search. So in that case, there's less information friction, and you do not have to rely on the social connections to realize whether or not I have significantly overpaid or underpaid in my previous housing transactions. And the third merit about Singapore is that there are two exogenous policy shocks. The first one is an increase of the loan-to-value ratio from 80% to 90%. This is a similar setting to Agarwal and Song's paper. And another policy shocks is the implementation of the debt repayment scheme to the bankruptcy system. You can understand that it like Chapter 13 in the United States or other related economies. So by the implementation of this debt repayment scheme, you are actually providing an exit point to the bankruptcy system that in another way is a significantly like decreasing of the potential cost upon bankruptcy. And this is a flash of the baseline findings. First of all, regarding who is mispricing, we find buyers and housings and sellers characteristics very important. So of course, there's an endogeneity problem here. And most important of all, we find we incorporate, our data could enable us to incorporate some characteristic of the sellers, such as whether or not they are engaged in some lawsuit event associated with the car accident, sales of goods, credit card abuse, or also the tenancy dispute. So this type of the sellers will be described as weak sellers. And we find this type of the seller characteristics will have a significant effect on the mispricing outcome. But importantly, it is not directly correlated with the bankruptcy outcome of the buyers. So in this way, it may serve pretty well as an instrumental variable for the further discussion. And the second point, in terms of the impact of the mispricing on bankruptcy exposure, we basically find a symmetric impact, which means that both overpricing and underpricing will have a significant impact in increasing the bankruptcy exposure, but from different way. So the overpricing way or the overpay way is actually going in line with the financial distress explanation, the huge debt burden, and there's alternative explanation about the underpay, the underpricing outcomes, which will go in line with the financial overconfidence channel, and we further trace the multi-housing purchase, the credit card abuse, or risky investments of the buyers later on, and to find the direct comparison between risk-taking behaviors and also bankruptcy exposure. So this is basically a symmetric way. And we also find a nonlinear way, which means that the underpricing cases is actually underpricing channel is actually functioning in the extreme cases. And then we take a step forward to look at the policy effect. So according actually following the loosening LTV policy, then people, they are facing higher debt burden, and then their financial bankruptcy exposure will be increasing associated with the financial distress channel. And then after the implementation of the debt repayment scheme, then people, they are facing a lower insolvency cost, and then they will boost, it will boost their financial they will actually boost their bankruptcy exposure through this financial overconfidence channel. And this baseline result survive about a bunch of the robustness tests. First of all, the perception of perception of these mistakes, whether or not people actually perceive this overpricing and underpricing outcome, and how do they actually perceive this type of the information. And then it also goes through the robustness test according to the associated with the selection bias of the household. For example, the buyers, the sellers, the matchings between buyers and sellers, and also the characteristics of the housing. And then it also survives with measurement errors with alternative identification of the mispricing, the degree of the mispricing. So naturally, this paper can contribute to several branches of literature. First of all, we highlight the dual channels of the financial distress and overconfidence. And most of all, focusing on the overconfidence channel, we provide more evidence to the current objective discussion associated with the liquidity constraint. So we are actually providing more evidence from the subjective perspective about the risk-taking behavior. And then we are able to connect the literature on the housing market and also the personal bankruptcy and financial management. So because we find a clear connection between financial mistake and also the bankruptcy exposure, so it is very important to think about how to avoid such financial mistakes. So it could have important policy implications on using this fintech or proptech technology as an automatic evaluation tool to help people eliminate these financial mistakes in their housing transactions. And also it could have some implementations on the unintended outcome of the bankruptcy system. So this is pretty helpful for some countries or economies with limited bankruptcy legislation system. So the government need to think about the policy implications on the lawmaking and also the incorporation of the financial literacy program. So I would like to briefly introduce the background institution in Singapore. So first institution is about bankruptcy laws. So the current law system is actually following the Singapore Bankruptcy and Insolvency Act, active in 1995. And so the bankruptcy costs in Singapore is extremely high. First of all, the information is freely available to the general public search. So there is a social stigma issue. And beside that, there is significant restrictions to the bankrupts. First of all, they have to keep very accurate records of their every expenditure. And they face severe restrictions in terms of the mobility and also the job market opportunities, etc. And almost all of their assets, except for the HDB flats from the which is actually subsidized by the government. Apart from this, most of their assets will be actually seized under this system. So the monetary or non-monetary cost is significantly higher than the risk and than the other economies. And then there is an amendment to this system, which is a incorporation of the debt repayment scheme, happened in May 2009. So to be eligible for this exit point, your unsecured debt has to be less than 100,000 Singapore dollars. And the whole repayment scheme should be completed within a fixed period, which is usually 3 to 5 years. But if you are eligible for the debt repayment scheme, you do not, your record will not be in this bankruptcy files, and then you do not need to face the social stigma issue. You do not need to face this a lot of limitations in terms of your expenditures, travels, job markets, and your asset will also not be seized. So in that case, it reduces the potential cost of the insolvency. And this is a direct comparison between the system in Singapore, US, UK, and Canada. So either from the eligibility level, from the length of the time until discharge, from the notable features, either monetary or non-monetary, you can see the bankruptcy cost in Singapore is significantly higher. And the second background is about the private housing market and credit growth. So there are basically two different property types. The first one is the HDB flats, which is eligible for Singapore citizens and PR. And the other one is private condominium and apartments, which is of our research interest. And the credit growth takes a very high ratio of their GDP in Singapore. And also it takes a dominant role in the household debts. And for a sufficient long period of time, the maximum loan to value ratio regulated by the government is 80%. And there is an amendment around 2005, and then the government suddenly increased the loan to value ratio from 80% to 90%. And of course, later on, there is a revision of this policy, and it could also serve as a falsification test. Briefly, we use 5 different data sources. The first one is the universal transaction data from the private housing market. So this is about 400,000 records from 1995 to 2017. And this is the spatial distribution of the samples. And the second data set is a proprietary agency data set. So we are able to connect the first one, first data, which is more about the characteristic of the property, with the second one, with the identification of the person, of buyers, sellers, and agents. So we can bridge these two data according to the exact address and transaction time of the property of the unit. And then the third data is a personal bankruptcy filing at the Supreme Court of Singapore. We can connect this data with the previous two according to the identification of the buyers and sellers. And the fourth data is lawsuit data. So based on this data, we could define the weak seller, which, as we have mentioned before, whether the seller has engaged in the lawsuit event associated with the car accident, etc. So we can connect this data according to the seller's ID. And the fifth one is a demographic information at the individual level. So based on this, we can incorporate as many as we want. We can as many as possible about the personal identification, about the gender, the date of birth, the race, and other characteristics of the buyers and sellers. So this is a distribution of the bankruptcy over time, either identified by the calendar year or the property purchase year. You can see a huge variation here. And to identify mispricing, it's very necessary to estimate the underlying value of the property. So in the literature, the common way to do so is to use a hedonic model. But we see some limitations of the model. For example, it cannot deal with the dynamic composition of the market. And at the same time, it cannot adjust for the spatial correlation, spatial coherency of the price in a very high dense region like Singapore. So we use a semi-parametric model with locally weighted regression estimator to eliminate these problems. And this is the process to get this underlying value of the property. So first of all, we use a propensity score matching to eliminate this dynamic composition effect. And then we incorporate a locally weighted estimator to do the estimation to adjust for the spatial correlation. So this is a spatial distribution of the general housing price index in Singapore from the beginning to the end of the observation period. So you can see there's a huge spatial variation over time. And based on this underlying value of the property, we can identify the mispricing proxies. First of all, we use a continuous measure, which is direct to take the difference between the transaction price and underlying value. And then we scaled this deviation by calculating the ratio of the price deviation to the real transacted price. And then we also incorporate a discrete measure, which is a dummy variable defined by different cutoff percentiles of the price deviation. So this is a statistic of the price of the mispricing proxies, either in a value pattern or ratio pattern or cutoff percentile. And this is a distribution of the mispricing proxies over time and also over space. So you can see there's a significant variation. In terms of the empirical model, first of all, who is mispricing or underpricing? We control for the characteristic of buyer of the housing and also the weak seller identification on the right-hand side of the equation, and control for the interaction between the regional fixed effect and also year-month fixed effect. And the second step, we use the weak seller as a instrumental variable because, again, it is directly correlated with the mispricing outcome in the varied transaction, but it will have no direct connection with the bankruptcy behavior of the buyer. So it serves as a efficient instrumental variable, and we can also explore whether there are any nonlinear pattern in the effect. And the third step is a causality test based on two policy shocks. The first one is the LTV shock, increased from 80% to 90% in year 2005. And the second one is implementation of the debt repayment scheme as an alternative scheme, which is actually in year 2009. So this is a pre-trained test associated with the LTV policy shock and also debt repayment scheme shock. You can see there's a significant difference between the treatment and controls. And we also test some specific characteristic, especially on the overconfidence side of the story. So you can recall, I have mentioned to be eligible for the debt repayment scheme, your unsecured debt has to be less than 100,000 Singapore dollars. So we use this as a breakpoint to test whether there are any discontinuity patterns after the implementation of the debt repayment scheme, and also especially for the overpricing type of the group of the household. So directly we find there is a discontinuity after year 2009, and it's majorly significant for the overpricing group instead of the underpricing group. So in terms of the first result, who is overpricing or underpricing, this is a very bulky table, so we can abstract some essential information from the table. So in terms of the direct impact channel, the buyer's characteristic, housing characteristics, and seller's characteristics, they are very important. And we find a significant positive effect of the weak seller identification. And then at the same time, the overpricing and they play this type of the characteristics, they are playing a different role in the overpricing and underpricing side of the story. So typically, for the cash buyer, they are more engaged in the mispricing outcome, and for the Chinese, for the buyers face high degree of the financial literacy, such as their self serving as a real estate agent, or they are real estate investors. Then for this type of the buyers, the mispricing outcome will be eliminated. And the second stage, to incorporate the continuous and discontinued measures of the mispricing to find the connection between mispricing and bankruptcy outcome based on the instrumental variable regression. So using the continuous measure and the dummy cutoffs, we can find that there's a significant positive correlation either from the overpricing scenario or the underpricing scenario. And then our data could enable us to track the later on behavior of the buyers. We define the risk-taking behavior associated with overconfidence in the 3 different ways. First of all, whether the buyer, they are continuously making multiple housing purchases after the first transaction. And second one, whether they are carrying high level of debt obligations. And third one, whether they file for bankruptcy as entrepreneurs. So this is a proxy for whether they actually engaged in very high risk-taking behaviors. So we can find in general, this is not significant for the overpricing group, but for the underpricing group, which is associated with the overconfidence channel, then these proxies are significant and positive. And then we take a step forward to look at the nonlinear effect by looking at the quartile regression. And then generally we find that there is a nonlinearity here. The overpricing is almost significant in different quantiles, but the underpricing is actually true for very extreme cases. And at the same time, we can identify the distance to the bankruptcy from this housing purchase and to test whether there are any acceleration effect associated with mispricing. And at the same time, we can find the higher degree of the mispricing, the faster they will end up in the bankruptcy filing outcome. And at the same time, we can we can do the comparison between the bankruptcy and the default, which is a milder outcome of the very adverse case of the bankruptcy. So generally, there's also a nonlinear pattern and a symmetric pattern in terms of the overpricing and underpricing outcome. And then we take a step forward to look at the causality test, focusing on different policy shocks. The first set of policy shock is a LTV limit increase in the year 2005 from 80% to 90%. So we can see basically it is functioning for the overpricing group instead of the underpricing group. And we further use the falsification test of the policy revision in year 2010. And of course, it is negatively correlate. There is a clear negative correlation between this policy and the increment of the LTV limit. And then we look at the debt incorporation of the debt repayment scheme in year 2009. And basically we find this is not functioning for the overpricing group, but it has a significant positive effect on the underpricing group. And we can also redefine the dependent variable to be whether the unsecured debt is around the level of the 100,000 Singapore dollars to 120,000 Singapore dollars to test the discontinuity effect. And in general, we find there's also a significant impact in increasing the bankruptcy exposure around the break point. And then we take some further look at the variations either among the different properties or among different buyers. So in general, we find for the resale property, for the freehold property or the property located in central Singapore, this type of the property attributes could be regarded as pretty scarce, and in this case there is a clear positive effect which means that if you make some if you significantly underpay in this touch of the scarcity type of the properties, and then the bankruptcy exposure will be further enlarged. And we further test the buyer attributes, whether it is significantly different from the young buyers or the alternative, or whether it will be significant for the buyers born before the World War II. So this provides some explanation about the conservation of the housing purchase, and also the characteristic associated with the education and cohort experience of the buyer. And then we test the robustness of the baseline study. The first one is the perception of the mispricing. So this is inspired by the related literature on peer effects. So if you are actually living in a high coherence community, then the information flow will be more sufficient, and it will be more likely for you to perceive whether or not you have overpriced or underpriced. So we establish a proxy which is identified by the share of Chinese buyers, which is also a dynamic proxy. So this is a demonstration about the spatial difference about the concentration ratio of the Chinese buyer in general. And then we incorporate an interaction term between the mispricing and also the proxy for perceive the more likely to perceive the mistake. And we find this is mostly functioning for the underpricing group, because it is more subjective instead of the objective channel, and it also goes in line with the risk-taking behavior, but majorly from this credit card abuse, which is also in line with the related literature on the conspicuous consumption, peer effect actually on the conspicuous consumption. And we further trace the dynamic peer effect, which is to see even if I myself do not make a do not mispricing in the previous housing transactions, but later on, if my neighbor has significantly overpricing or underpricing, if I perceive this type of information shock, what that this will have an impact, whether this will have an impact on my further bankruptcy filings and also the risk-taking behaviors. So in general, we find the neighbors' overpricing behavior will serve as an information shock and will have a positive impact on my overconfidence behavior associated with more aggressively, more risk-taking decisions. And the second side of the robustness test is about the selection bio of the household. So, and there could be some household specific type of the household. They are consistently overestimate or underestimate their housing prices because they are radical, or either because they are conservative. So basically, we check if the two houses traded by the same two houses traded by the same household, one time as a seller, one time as a purchaser, and to see whether they are there is consistent or repeat mistakes for specific individuals. So this is a tabulation of the result, and basically the due mispricing outcome is takes only a very limited ratio of the total sample. So by getting rid of this type of the sample, we can actually find the individual actually the baseline results still hold for the overpricing and underpricing cases. And similarly, we can also trace the credit records of the buyers and getting rid of that bias with a very bad credit records. So the results still hold. And there could also be some selection issues associated with the characteristic of the property. So this is a demonstration about the distribution, mispricing distribution across the repeat sale and new sale properties. And in general, we take a further look at the quality effect. Similarly, by getting rid of the property which are consistently overestimated or underestimated in the transactions, and this could be some quality issues and other characteristics, other latent factors of the properties. So after controlling for this issue, the major results still hold. And there could also be some specific matching between the buyers and sellers. For example, if they are very close and the underpricing outcome might not be regarded as a positive income shock because I already know this type of the information. So in this case, we divide the total sample into the insider trading or outsider trading. So the definition is based on the related literature. And then we also test whether there are significant difference, especially getting rid of this global financial distress time of the period, because in that time of period, the bankruptcy exposure is systematically higher. And the market is also very noisy. And the last one is measurement error. So we use alternative identification of the mispricing, alternative measure to estimate the underlying value of the property. So this is a result based on machine learning technology, basically the gradient boosting machines. So directly we find there is a clear positive correlation between the previous measurement based on the locally weighted regression estimator and also this machine learning estimator. And we also see the this variation over years is also limited for these two identifications. And then using the same strategy with different identifications based on the machine learning, we also test the asymmetric effect and also the policy shock. So the result is majorly consistent with the baseline, but the magnitude is slightly lower than the identification based on the locally weighted estimator. So back to the concluding remarks. First of all, we find the buyer, housing, and sellers characteristics matter for the mispricing outcome. So this raised a serious endogenous concerns. And then we use a seller's big seller identification as an instrument variable to study the direct connection between the mispricing and also the bankruptcy outcome. So the major result is asymmetric and also nonlinear. And for the underpricing or the overconfidence channel, it actually functioning through these very extreme cases, very extreme positive income shocks. And then a loosening policy towards the loan to value ratio or the incorporation of the exit point of the bankruptcy system will further boost the financial distress and overconfidence channel. And then the baseline model will not be actually is pretty consistent with a series of the robustness tests associated with the perception, selection bias, and also the measurement. So this is what I have today, and any comments, any suggestions are very welcome. Thank you.
Thank you very much, Prof. Fan, for sharing with us very detailed and insightful research. I saw that you mentioned at the early slides that you have this research has a policy implication for fintechs. So can you elaborate a little bit more on what policy implications can be derived?
Oh, thank you for the comment. So generally, the incorporation of the fin technology is to actually eliminate the occurrence of the mispricing outcome. And because of we can actually, if the government can provide us some platforms of the fintech and proptech, then it will decrease the probability that I overpricing or underpricing my housing transactions and mitigate the difference between the real market transactions and the underlying value of the property. So that is a major policy implications on the proptech perspective.
Thank you very much.
Thank you.
Any other questions?
I've got a question.
Thank you.
That is for the gradient boosting machines, and then how can the gradient boosting machines to detect like the mispricing, because like, it is like mainly used for like prediction. So how to use it for like identification of the mispricing then?
Thank you for the comment. So the GBM is actually incorporated as an estimator of the underlying value of the property. So we input the characteristic of the property into the machines, and then it comes up with the underlying value of the it shares a similar concept with the hedonic model to provide some market comparison price based on this characteristic of the property. And then we can compare the difference between the real transaction price and the estimation from these GBM machines, and to identify whether it is overpriced or underpriced based on market comparison.
Okay, thank you.
Thank you.
Okay, if no question, thank you very much, say for Profan, and also thank you to all the 4 speakers in spending your time and sharing with us your very interesting research this morning. I was just told by my students that actually on like the Bilibili live, we have over 100 audience listening to it, so it's much more than in this room. So thank you very much. Okay, for spending time with us, and that's the end of the morning session. And in the afternoon session, we have 6 speakers from non-local and overseas universities. So the time will be 2 p.m. So see you later, and thank you. 谢谢你的学生啊，那个帮我们那个 set up 这个哔哩哔哩，这个上午的 audience 在哔哩哔哩上还挺多的，有100多个。
哦，谢谢啊，不客气不客气，这个我给他交代了好几次了，这个不知道他今天
没问题没问题，挺好的
挺
好的，
我觉得
都挺好的。你稍等一下啊，我们待会儿这边有一些设置。 Okay, good afternoon. It's about time to start our afternoon session. And this afternoon, we have 6 speakers. And the first speaker is Professor Yu Huayi from Renmin University of China. And his topic is a tale of 2 districts, the impact of district consolidation on property values in Shanghai. So Professor Yu, the time is yours. You're muted.
Yes. Good afternoon, everybody. Thanks, Professor Lee's invite. It's my ownership to give a presentation about my paper, A Tale of 2 Districts. Let's start my presentation. Let's give a PPT. Here is my ownership to give a presentation about my paper, A Tale of 2 Districts, the impact of district consolidation on property value in Shanghai. Let me give a highlight of this paper. The first, the effect of district consolidation, which is a very big change in administration level. How this district consolidation on property value has certainly discussed. The second is we explored the response of property value to district consolidation case in Shanghai by boundary difference in difference method. The third, the consolidation case causes a rise in property value by 1.6% in the consolidated 2 districts. The fourth is that the impact of consolidation on property value in the more developed Jing'an district is insignificant. However, the property value in less developed Zhabei has increased by almost 5% since the consolidation is reported. The final highlights is that the consolidation has an expanding impact on the property value in Zhabei district over time. First, let me introduce the introduction about this paper. The first motivation about this paper is that administration adjustment became very popular, especially in China, but this topic is certainly discussed. We all know administration division lead a certain degree of regional segmentation, which hints the trans-regional flow of resource and production factors. Administrative division may also constrain the further expansion of a city. The administration division system was intensified by China's fiscal decentralization reform. In China, especially in recent years, administration adjustments are used by China's local government as a tool to promote the economic development. Since 2000, 2 types of administration division adjustment was popular in China. The first one is called turning counties into districts. In Chinese, it's 撤县社区. The other one is the consolidation of district. In the past, several studies has investigated the effect of turning counties into districts, but the studies on the consolidation of district are very certain. I think consolidation of district is very important from two aspects. The first is that consolidation of district usually take place in a city's downtown areas. The second is that district consolidation directly cut down administration and executive expenses. In the past, I gave an example of district consolidation. Like in 2010, Chongwen and Dongcheng district has consolidated. Xuanwu and Xicheng district has consolidated. Other cities have also led the district consolidation, like as Luwan and Huangpu district consolidation in 2011 in Shanghai, and other in Nanjing and Guangzhou also happens district consolidation. The second motivation about this paper is this paper gave an example about which is better about fragmented or consolidated structure in urban economics. We all know there are two types of urban administration division structure, fragmented and consolidated structures. Which is better? Previous literature has controversial points. However, in real estate market, fragmented or consolidated structure, which is better? This paper can give us an example. The third motivation of this paper is that irreversible policy like administration division adjustment should be carefully evaluated. Given that the consolidation of municipal district involves the most populous and developed downtown areas in a particular city, the municipal government should take almost care in making such decision. In recent years, China's central authority has required local government to take responsibility for stabilizing housing prices. The effort of local government in stabilizing housing prices are highly requested by China's central government, where the consolidation of municipal district, which is not a policy aimed at housing prices, affect housing prices in relevant areas. This is an important question to be studied. I think there are three mechanisms about the district consolidation on housing prices. The first is economics of scales. Such we know district consolidation clear away the previous district boundary, which facilitate the intra-regional movement of people, goods, information, capital, and service, and also promote industrial agglomeration. Hence, economic of scale is a possible mechanism leading the dynamic of housing prices. The second possible mechanism is the redistribution of public goods. The consolidation of district lead the transfer from more developed district to less developed district because of the alerting access of residents to public goods. For example, before consolidation, superior public goods such as school, hospital, in the more developed Jing'an can only be enjoyed by its city in Jing'an. After consolidation, residents in Zhabei obtain the rights to enjoy the better public goods in Jing'an, which may then dilute the public goods distribution in Jing'an distributes. This mechanism will alert housing prices. The third possible mechanism is the reputation effect. The consolidation can raise the property value in Zhabei by enhance the reputation. Due to history reasons, Jing'an is a traditional poor district. However, is the brownstone district. Jing'an is traditional brownstone district. However, Zhabei is well known as a poor district. Through the reputation effect, the consolidation can make Zhabei up-and-coming district and thus increase the property value in Zhabei without hurting the housing prices in Jing'an. I think the main contribution of this paper is that we discuss the fragment structure and the consolidated structure, which has not been resolved. So this study provided an empirical case from China, from the perspective of real estate market. This paper used microdata of resort property. This gives us more accurate information for estimating the effect of consolidation on property values. The second part of this paper is literature and event background. As the time limited, I do not give a detailed explanation about the literature. The literature, I just give a summary of the previous literature. Although the topic of consolidation, consolidated and fragment administrative division structure has been investigated, the conclusion are inconsistent. The influence of those structures on real estate market is neglected. Previous studies on this topic typically lack resold property transition microdata, which may neglect property heterogeneity and geographic information. Some studies may choose an improper control group in their analysis. My study has improved previous literatures. About the event background, this is the map about Zhabei and Jing'an district in Shanghai. We can see this picture is the map of Shanghai and where is Zhabei and Jing'an. The former Jing'an is one of the most development districts in Shanghai. Jing'an has a very good school, very good hospitals, and stadiums in Jing'an also are very famous. However, Zhabei is a traditional poor district in Shanghai. Public resources in Zhabei are relatively scarce. This is the statistics about Jing'an and Zhabei before consolidation. We can see from this table, we can see that Jing'an is more developed than Zhabei in many indicates. On September 7th, 2005, the government of Jing'an and Zhabei officially announced that these two districts were consolidated. Hence, this event gave us a treatment which can do empirical studies. The third part is the data and the method of this paper. This paper used research apartment transition data from Shanghai Lianjia Real Estate Agents Company. This is the largest resold property agents in Shanghai. Almost 1/3 of Shanghai's resold apartments are aged by this company. Lianjia's data provide us very influence, very detailed information about each property, which give us a chance to do empirical studies. The frequency of this data set is daily, which can catch the property value change accurately. This is the summary statistics of this my data set. The empirical model in this paper is a standard difference in difference estimation. It's a very normal setting. Different from previous difference, we add neighborhood fixed effect and monthly time fixed effect into regression equation. Another difference from our model is that we also these things function in this estimation, which can capture the geography heterogeneity, which influence the housing prices. In this way, I think my model are more accurate than previous one. The first part of this paper is the result of regression. First, I give a overall impact estimation. We can see that the consolidation had led to a significant increase for the two consolidated districts. Then we give a differentiate estimation about the consolidation on property value in Jing'an and in Zhabei. We can see that the consolidation has a different impact on Jing'an and Zhabei. However, this table 2 another is that we also choose different control groups to estimate the differentiate impact of housing prices in different districts. When Zhabei is selected as treatment group Hongkou, which is adjacent to Zhabei, but not to Jing'an, is selected as the control group. When Jing'an is selected as treatment group Changning, which is adjacent to Jing'an, but not to Zhabei, is selected as a control group. From this table, from table 5, we can see we estimate the consolidation's impact on property value in Zhabei from different boundary, different bandwidth setting. The estimation has a robust result. That is the consolidation of two districts has very significant impact on housing prices in Zhabei. However, we choose Changning as control group. We can see that the consolidation of two districts has an insignificant impact on housing price in 静安。This result indicates that the consolidation of Jing'an and Zhabei has an insignificant impact on property value in Jing'an, which is a more developed district. This result may caused by two counterbalancing effects. On the one hand, Jing'an faced the dilution of its public goods and fiscal resource after the consolidation, which dampens the property value inflation. On the other hand, the consolidation also promotes the economics of scale for Jing'an, given that the two opposite effects may be offset. The consolidation may lead to insignificant impact on the property value in Jing'an. However, these two counterbalancing effects can't be separated due to data restriction. I think this is a restriction of this paper. We also do event study to find the dynamic impact of district consolidation on housing prices. This is the result of the event study. We can see that the effect of district consolidation expand over time. We can see that the coefficient expand over time, and this coefficient are significant. Finally, the fifth part, we have done some robustness tests about our regression. Each test shows that our estimation are robust. The first is a parallel trend test, which indicate that our difference in different regression satisfy the parallel trend test. The second is placeable test. We make some counterfactual treatment time and counterfactual treatment groups, which shows that only the real treatment has a real effect. The placeable treatment is insignificant. We have also do alternative control groups regression, which provide us a very similar result as the main part of our regression before. Hence, the results of this paper satisfy the robustness check. Finally is the conclusion of this paper. First, the consolidation of Jing'an and Zhabei caused a rise in property value by 1.6% in the consolidated two districts under difference in different estimation. The second, the consolidation has a heterogeneous impact in different districts. The impact in the more developed Jing'an is insignificant, which may due to the economics of scale being offset by the effect of transfer in Jing'an. The consolidation for the less developed Zhabei district significantly increased the property value by almost 5%, which reflect the combined effects of economic scales, transfers, and reputation. The fourth, the municipal consolidation has a sustainable impact on property values in less developed Jiabei district. Jiabei's property value has increased since the consolidation was reported and gradually expanded during the sample period. This paper also has some policy implications. First, the government should execute the consolidation of municipal district carefully to avoid the sharp rising of property value because of the consolidation, especially when and where property value rises sharply. The second, local government should pay attention to narrowing the gap of public goods in different justifications by the fiscal system to promote the harmonious development of regions. The third, the local government should break down the jurisdictional segmentation of certain public service to promote the shopping of promoting the sharing of public goods to the whole cities. Thank you so much. Thank you.
Thank you very much, Professor Yu, for sharing with us your interesting research on the consolidation effect. The floor is now open for questions. Yes.
Can you hear me?
Yeah, yes.
Thank you, Professor Yu, for your wonderful research, and I have a question for you. It looks like the local government of Shanghai gets a win-win situation. You know, the Jiabei got the reputation from Jing'an, and Jing'an got the potential land and human resources from Jiabei with the imagination of economic development. My question is, in your study, whether there are any specific findings for the indicators which directly match the administrative districts, you know, like the school district division, or we call it 学区.
Thank you for this question. So I think this paper gives us example about district consolidation on housing prices, which is certainly discussed by previous literature. You say that Jing'an and Jiabei's consolidation looks like a win-win game, but actually from the real estate market, we can see that this district consolidation has led a very sharp increase of housing prices, especially in Jiabei district. In about as our estimation, in about half a year, housing prices in previous Jiabei district has increased about 5%. It's a very fast increase of housing prices. My point about of our study is that the government should carefully about making the decision of district consolidation concerning the housing prices. maintaining the stability of housing prices should be considered when making the decision of district consolidation. I think you mentioned that school district consolidation. I think this may be a very important reason lead the housing prices change inside the city. We know that Jing'an has very good school resource. Before the district consolidation, only residents in Jing'an can enjoy the school resource. However, when two district consolidation, the people in Zhabei has the access to enjoy the school resource in Jing'an. I think this is the very important reason leading the housing prices change in Jing'an and Zhabei district. As the limitation of our data, we have now to separate the factor whether the how much is the school district and school resource leading to the housing prices dynamics. I think in the future, maybe I will extend our research and estimation after the district consolidation, how much increase of housing prices is leading by the redistribution of school resource. I think in the future, maybe I will do this research. Thank you very much.
Thank you.
Okay. Thank you for your discussions. Thank you, Prof. Yu, for your presentation. Next, our next speaker, may I invite Dr. Hu Mingzhi from Jinan University. His topic is do homeowners have a longer commute? Dr. Hu, the time is yours.
Okay. First, I would like to thank you, Dr. Lee's invitation to let me have this great honor to share a recent working paper which talk about home ownership and commuting time. This paper is quite preliminary and is cooperated with Dr. Lin from Florida International University and Dr. Liu from University of North Texas. But since the paper is using the US data, I will introduce a little bit about the US background. And we know that a longer commute is definitely an undesirable thing. But however, there is an unfavorable fact is that for the American adults, which aged 16 and older, on average commuting time is for one-way commuting time. It's increased from time to time. And specifically, it's increased from less than 22 minutes in 1918 and to increase to more than 25 minutes in the 2018. So this is a record high in the US history. And somebody would ask, oh, well, 27 minutes, it seems not like a very big deal. But when we add numbers together, things would totally change. For example, when we think about 27 minutes per working day, that's equal to almost 4.52 hours per week for a typical worker who works for 5 days a week. This is for round trip. And when we think about the times in a year term, 27 minutes will equal to almost 237 hours per year, which means for typical workers, he will spend almost 10 days on the road. So commute time is really a big issue. And this is US data. I think this situation is more serious in mainland China. And so previous literature already showed that there are many factors that can impact the collecting the commuting time and the undesirable outcomes. For example, the longer commute is found to be associated with the higher stress level, the increased cost, including the opportunity cost and timing cost, and of course the money cost. And also will cause worse health status, and it will cause less productivity for workers, and will cause lower subjective well-being, such as life satisfaction and happiness. So commuting time seems to have such a great impact on our lives, and it's necessary to study its determinant. And in fact, previous studies have already shown that there are many factors can impact the commuting time. And most of the literature focus on the household characteristics, such as race, gender, income, age, and wealth, and negative variables. And Metro and Sophie Hall found that home value and where a household works and lives have a great impact on the commuting time. And Artis and Lee and McDonald have a good summary on the determinants of commuting time. And our research adds to this line of research by examining the impact of ownership on the commute. Also, our study relates a large strand of literature that studies the social and economic consequence of ownership. Previous studies document many social and economic benefits of ownership. For example, ownership will have a positive impact on people's wealth accumulation, and it will cause a reduced cost. And previous study also showed that compared with renters, homeowners are more likely to be socially connected, and they are more likely to take part in the political and social activities, and they have more likely to be better citizens. They have a higher donation rate, and their children are more likely to be success. So it seems that owning a home has so much economic and social benefits, and this is the very reason that the American government has been subsidizing the ownership. Yes, and our paper, we argue that when we judge the policies that subsidize ownership, it is necessary not only to consider the benefits of ownership, but also the negative consequence brought by the ownership is more important when we judge that whether it's necessary to subsidize ownership. And yes, we're using data from the US, which is, we'll introduce a little bit later. When we're using data from the US, we found that ownership has a negative consequence on the commuting time. After controlling for location and a wide range of household demographic and socioeconomic characteristics, we found that compared with renters, homeowners on average will spend 6.9% more time in commuting. And because in our first sample, on average, commuting time is around 44 minutes, which means compared with renters, homeowners will spend almost 3 more minutes in commuting per working day. And our findings is quite robust to different model specifications, such as individuality issue of ownership and omitted variable bias and model misspecifications. And we also distinguish household along 4 dimensions, such as location, race, income, and wealth. And there are several interesting findings. We found that the impact of ownership is larger among households living in metropolitan areas, and it's larger for long white household and household with low income and wealth. So overall, our study highlights the negative externality of ownership that increase homeowners' commuting time. So these are our main findings. And the data, we use data mainly from the PSID, that is Panel Study of Income Dynamics. This survey data is collected by the University of Michigan Survey Center. And this is longitude household survey data, which studied in 1968 with a sample of over 18,000 individuals living about 5,000 families in the US. And this data is surveyed annually before the 1997 and annually afterward. We use the latest 4 waves, that is 211 to 2011. Because the question on household commuting time is only available since the 2011 survey. And this data set is quite similar to the CFPS in mainland China. So why PSID? The first reason is that this survey contains detailed household demographic and socioeconomic characteristics, which are documented to be very important in predicting the commuting time. And this data also record each household geographic location. Geographic location is really important in related to the commuting time. Let me see this picture. We can see that this picture shows that the commuting time really varies significantly across the US, the states. We can see the commuting time is on average longer in the East Coast and the West Coast states, such as New York, New Jersey, and the Washington and California. And this data set have the state code, the state identifications, so we can control for the state characteristics by including the state dummies. And it's also important to control for other location features, that is the county level. We can see that in some states, the on average commute time is short, but for some counties in these states, the commute time is very long. For example, for the East Stroudsburg in Pennsylvania, we can see in the before figure, we can see that the commuting time in the Pennsylvania is not very longer, but for the East Stroudsburg counties, the commuting time is very long. And a large example is for the Washington, D.C. Washington, D.C., we can see that the commuting time is, on average, is longer. But for the one counties in Washington, D.C., the commute time is very, very short. So it's better to control for the county dummies. But unfortunately, the PSID do not have the county code. Alternatively, there are 2 broad categories in PSID for the latest 2 rounds, and there are 9 categories in the before 2 rounds. And in PSID 2011 and 70s, they have 2 broad categories for the location, that is metropolitan areas and non-metropolitan areas. Metropolitan areas, which is defined as indicator variable, which equals 1 for the county with a population more than 250,000 population or more, and equals 0 otherwise. So we just control for the metropolitan areas in our regression model because we do not have the county dummies. So the third reason why we use PSID is that each household in PSID is assigned a unique identification numbers. This means we can construct a panel data set. And the final reason is that the data set is nationally representative. So after dropping observation with missing values, we have got the final 4-year panel data set, which contains almost 24,000 observations. And the table 1 presents summary statistics of these variables. The column 1 presents a full sample. We can see that on average, the commuting time is about 44 minutes. And we can also see that the commute time is different between homeowners and renters. On average, unconditionally, compared with renters, homeowner will spend almost 3 minutes more time in commuting. And these differences is quite significant. And then we can also see that homeowners and renters, they have significant differences along with several household characteristics. For example, homeowners on average, they are much wealth. They have more household wealth, they have higher income than renters. So these findings highlight that it is necessary to control for these household demographic and socioeconomic characteristics in predicting the commuting time. So this is a baseline model, and the dependent variable is the log value of the commuting time for household I in the state J and year T. And homeowner is an indicator variable of ownership, which equals 1 if the respondent is homeowner and 0 otherwise. And we also controlled for the household characteristics, and we also controlled for the year dummies and the state dummies. And here is our baseline result. In column 1, we controls just the ownership. In column 2, we further add the household demographic characteristics. In column 3, we further controlled for the household socioeconomic status. And in column 4, we controlled for indicator variable of metropolitan area. And in the final column, we add the state and year fixed effect. So we look at the last column of table 2. We can see that after controlling for location and the household demographic and the socioeconomic characteristics, and compared to renters, homeowners on average spend almost 6.9% more time in commuting. And in the last table, we can see that the on average commuting time in the full sample is around 44 minutes, which means compared with renters, homeowners will spend almost 3 minutes more in commuting per working day. And in the last section, we will discuss the robustness checks. We address 3 potential issues with the previous estimations. The first one is indigeneity, and the second one is the formative variable bias. The last one is the more functional misspecification. And of course, ownership is always an indigenous decision. And they also have some reverse causality between ownership and the commuting time. So we use the average approach to deal with this issue. And in our paper, we just directly borrow the method from the Pascual and Glaser, which is a JV paper. They use a group average ownership rate as an instrument for individuals' ownership. And a similar strategy of this construction of RV is used by Hollian. In our paper, the average ownership rate is created with an age quantile, income quantile, wealth quantile, education attainment, and state. This is our IV. And this is the IV approach, the result from IV approach. Basically, previous findings still hold after using the IV approach. We found that the ownership is positively associated with the commuting time. Now we deal with the omitted variable bias. And since although we have controlled the location, the fixed effect, state fixed effect, and household demographic and socioeconomic variables, we cannot control everything. So we use the panel models to control for the time invariant household unobservables, which is a UI in the model. We know that the random effect model will be more efficient when UI is uncorrelated with X, that is the covariate. And the fixed effect model is more efficient when these two are correlated. So we report both results from random effect models and the fixed effect models. And again, previous results still hold when we use the panel models. Compared with renters, homeowners have spent more time in commuting. And although the panel models can control for the time invariant unobservables, there are other unobservables, they are time variants. So we use another strategy to test whether our results can be driven by the time variant unobservables. We use a test strategy developed by Oster, which takes into account the association between the dependent variable and the observables to create the unbiased treatment effect. Let me briefly introduce what the process. Suppose that the delta is a value for the relative degree of selection on the observables and unobservables. And as suggested by Tangin and Oster, delta equals 1, which means equal selection may be a good choice, which means the unobservers are as important as the observers. And suppose that the R max denotes R square from our theoretical specifications that include all variables, including the unobservers and observers. And R bar denotes R square from a fully controlled specification, which I have presented in the last column of table 2. So also suggest that a value of R max equal to 1.3 times R bar is enough, which means when we control for the unobservers, the R square will increase by 30%. This suggests that this setting is good enough to calculate a bias-adjusted treatment effect. So we perform the sensitivity test by assuming that the R max will equal to the 1.1 to 1.7 times of the R bar. And here is our baseline, our result from the test. This is our baseline treatment effect. I have reported these results in the last column of table 2. This is a fully controlled specification. And we can see that when we setting that the R max equals 1.1 to 1.7 times R bar, the bias adjusted effect remains quite similar to the baseline treatment effect, which means when we consume that the R square will increase by 10%, 20% to 50% when we control for the unobservers. This coefficient is the unbiased treatment effect. We can see that these coefficients are quite similar. So this finding suggests that our previous estimations is unlikely to be driven by the unobservable selection bias. And the last is the functional misspecification, and we use PSM to deal with this issue. And because I think we all familiar with this technique, and we will just briefly introduce this result. And here is the results estimated from PSM method. Basically, previous estimation still holds. We found that after controlling for the model misspecifications, ownership is positively associated with the commuting time. And this is a result for the balancing quality test. Basically, these two test results suggest that our data is almost balanced after matching, suggesting a good balancing quality. And in the further analysis, we attempt to examine what kinds of households are more likely to be impacted by the ownership. We first classify household into 2 categories according to the location, which is in the metropolitan areas and in the low metropolitan areas. Basically, we found that the impact of ownership is much larger in metropolitan areas compared with that in non-metropolitan areas. And we also found that this ownership effect is only significant in metropolitan areas. It becomes insignificant in the non-metropolitan areas. Next, we divide household by the race, and column 2 of table 8 represents results in this column. And we found that, firstly, the impact of ownership is significant for all race groups. Second, we found that the impact of ownership is smallest on white homeowners, and it's larger for other race homeowners. We also divide household based on their wealth. We divide 4 groups based on their wealth. The first is a less than 25 percentile group, 25 to 50 percentile group, and the 50 to 75 percentile, and the top 25 percentile. Basically, we found that the ownership, in fact, is significant and larger in the less wealthy group, which have the less household wealth, and it becomes insignificant for the wealthy group. We also divide household based on household income, and the findings quite similar when quite similar to the findings when we divide groups based on household wealth. Basically, we found that the homeownership impact is largest and significant for the household with lower income, and it becomes minimal and insignificant for household with a higher income. Okay, so this is the whole story. Let me give a brief conclusion. Basically, after controlling for the location and household characteristics, we found that homeowners will spend more time commuting than renters, and our findings are quite robust with several model specifications. And we also found that this homeownership impact is quite larger for household living in metropolitan areas, and is larger for long-wide household and household with low income and low wealth. Implications, yes, because in the United States, homeownership is regarded as an essential part of American dream. And the basic reason is that homeownership can bring a lot of social and economic benefits. And these benefits always have been documented in previous literature. So we contribute the literature to on the effect of homeownership by providing a new insight into the possible negative consequence brought by homeownership. That is, only a home will increase the commuting time. Future studies, yes, because in this paper, because it's quite preliminary, we do not examine the mechanism or possible channels that the homeownership could impact commuting time. And there are many possible reasons. For example, many workers they are forced to living in the suburban areas because the housing supply in the downtown areas is insufficient. And the previous literature suggests that homeowners are less likely to move across geographic locations. So the lock-in homeowners, they are most likely to suffer the pressures from the mortgage payment. So they are more likely to finding for high-paying jobs, because we know that the high-paying jobs and the decent jobs, people can more likely to find these kind of jobs in the downtown areas. So we can see that living in the suburban areas and finding a job in the downtown areas will absolutely cause a longer commute. And of course, we do not testify these mechanisms. And I think this is an interesting part, and we will further examine. So I think a productive area for future research would be use additional data to investigate the mechanisms or possible channels behind why ownership affects the commuting time. Okay, this whole story. Thank you.
Thank you very much, Dr. Hu, for your informative presentation. The floor is now open for questions. Actually, I myself is curious about, say, whether you have applied this type of model or whether there's data available in China, and if you apply it to see the situation, whether or not the situation will be different between China and USA.
Yeah, I think this relationship is quite complicated in China, because in the US, most people will drive the car from the living place to the working place. But in mainland China, there are many tours, the cars, the subways, the public bus, and I think this relationship is quite complicated.
Okay, thank you. Yes.
Hello. I also have a short question. Is there any connection between the the commuting time and the cost?
We do not test this relationship between because we do not have this data.
Okay. Okay. Thank you.
Okay, if no other questions, thank you for your discussion. And next, let's invite Dr. Asher Javid, okay, from Marseille University, New Zealand, to give us a presentation. His topic is housing charges to fund bulk infrastructure, innovative or traditional. You may unmute yourself.
Hi, good afternoon, everyone. Can you hear me now? Yes, thank you. Thanks, Victor, for inviting me. And I was just listening to a very wonderful early career researcher presentation, which is like doing their best. So I will be just presenting findings of my one of our paper, which is recently been published. So it's a kind of paper which we have looked at, like housing charges, whether is it an innovative or traditional way of funding housing in New Zealand. So I have co-authored this paper with Graham Squares and one of our PhD student, Hai. So sorry, this paper is already being published. So you may have a look at this this paper in Regional Studies and Regional Sciences. So this is my outline of my presentation. Like I will be giving some background of infrastructure, and then some contents are not relevant to the paper, but I will be providing some background. What is the current situation in New Zealand, especially the housing situation. And we will be looking at after COVID-19, how that has impacted the housing in New Zealand. There will be research gap, research questions, and research method. We have used a mixed method approach. And then there's a case study as well, like Milldale project, and then some preliminary, like the results which we have like got from the project. And also there will be a conclusion, and at the end there will be question and answer session. So as we already know, like infrastructure is very important for economic and for economic development of any country and for improving the quality of life. So at the moment, like the global infrastructure, which will be like needed at 94 trillion between 2016 and 2040. So this would be 19% higher than would have been delivered under the current trends. So which is like an average 3.7 trillion per year. Here we can see this is like a 3% of GDP for if you look at from the global infrastructure outlook, and if you click on this investment, including the sustainable development goals, it will be like the trend will be like this one, and there's a gap between the current trend and investment need. As we already know, like there are these are the few instruments which are being used for any kind of financing and funding infrastructure. Like taxes and fees are even toll roads are quite common, but we have a different other alternative as well, which can be used to fund these infrastructure projects. Like either we can use value capture mechanism, public-private partnership, which will include the design, build, operate, and transfer sorry, approach. And so debt finance, developer fees. So these are a few other innovative methods which can be used to fund any kind of project. And but bulk infrastructure, which is like we are focusing on transport and water, excluding other infrastructure like energy, waste, information technology, and other public capital services. As infrastructure projects require a very huge amount of upfront capital, the revenue, like how we are going to pay back, it is uncertain for most of the time because of different risk involved in those infrastructure projects. So looking at the housing affordability, which is one of the key component in New Zealand context, like we can see that Hong Kong is at sorry, as one of the seriously unaffordable at the moment, which is like at the top of the list. But in New Zealand, also Auckland is one of the like most unaffordable city in the world as well. So, and especially after the pandemic, we saw a lot of businesses and people are being affected by this pandemic, and working from home was a new trend. This is a current report, like in early January. So you can see, sorry, the trend in New Zealand asset classes is like 1.4 trillion is in the residential real estate sector, and it is like 307 billion in home loans. And we can see the other commercial and residential, commercial and industrial real estate is like 232 billion. So major component of the real estate market is like a residential sector. Even people like are not willing to invest into the stock market. Just looking at the median house prices in New Zealand, we can see that this is a national average, which was like in April last year, it was 680,000, and now we can see after a year it's 810,000, which is national median house price. But looking at only Auckland, it was 925,000 last year. It is over $1 million at the moment. And interestingly, I'm living in this area, which is Manawatu Wanganui region, and we saw like the house prices are rising by $1,000 per day, which is quite astonishing for everyone who is like wanted to own a home, especially for first home buyers. So, sorry, this is national median house prices in New Zealand, and we can see the trend, which is like after, especially if you're looking at these, comparing January 2020 and January 2021, we can see how the prices have gone up. This is like one of the main reason is like we have lowest mortgage rate at the moment, which is going to stay at the same, like around 3.5% over the next maybe couple of years. National weekly wages, we can see a trend, upward trend, but still like it's, if you compare with the house prices, we will see like how unaffordable is it. This is weekly rents as well, which is like upward trend. And this is like a house price affordability. We can see the like median house prices to annual wage is like around 10, which is sorry, getting more unaffordable for especially for like average person who is like in a middle class. So it's really they are struggling, and it is like it will take around if I'm not wrong, like it will take you around more than 5 to 6 years to just get your 20% deposit if you are working. And here is another graph about rental affordability, about annual rent to annual wage ratio, which is also getting more unaffordable for even for rental tenure as well. So by looking at especially Auckland region, like we can see there are some new home consented were issued like in last in April 2021, around more than 15,000 for new build consented issued, but still like there's a huge gap between demand and supply. This graph shows like there's around, but looking at the Auckland residential, it is like around more than $6 billion is the building works at the moment. These are the new dwelling consented, like we can see as compared to 2019, it is like more than 18,000 new building consent issued in Auckland only. So what are the research gap? Like previously, some studies they looked at like what is the impact of financialization on infrastructure development. But especially in New Zealand, there was no such study, like especially using the housing charges to finance those bulk infrastructure projects. So our question was like how the housing charges, is it an innovative instrument to finance those infrastructure development projects? So we use like as compared to other researchers, which I saw most of the they have used like quantitative data, but our data was like based on the semi-structured interviews. And we also collected some secondary data. There were some key institutions involved, and there was also a Milldale case study, which was one of the unique case study in New Zealand. They have used this approach to look at like how they can finance those, provide those infrastructure facilities, and they can charge the homeowners over a period of time, like for let's say 30 years time. So these are the interviews like from involving those banks, major banks, government institutions, local councils. They were interviewed to collect data for this project. Milldale project is actually it was like jointly like developed by the Crown infrastructure partner, which was like using a SPV. Like you can, I'll show you on the next slide. So they will be providing some. They will be sourcing CIP, like Crown infrastructure partner will be sourcing finance. So all the roads, wastewater, and other facilities can be provided. But instead of increasing the section value or the land value, the cost will be recovered by the council. Sorry, through like just like the council is charging rates every year, so they will add into the invoices, and homeowners will be paying that one over a period of time, but they can also prepay in full as well. Sorry. So you can see this is a kind of SPV special purpose vehicle was used to collect like equity and debt and provide those all those facilities. This project was like it will be built in 3 different stages. So even each stage they have a they have a different section to open up. So there are like more than 3,000 homes will be built, and it will also there are also 680 apartments, and there are some commercial shops and facilities also available. So a Crown infrastructure partner will like they develop a commercial model for government and private sector to fund these new roadings and also 3 water infrastructure and other facilities. Sorry, to just make it more feasible for the residents to just move into the area. So there are different types of options available, like the property prices also like you can see not affordable one, but still like it's a kind of quite attractive opportunity as. These are this is a kind of you can see just different stages of that project. So why they used sorry, we can see the innovation part. Like initially we can have some ideas, and then we can step up with the, how that idea can meet our requirement, and by the end of the day we can see how those we can fund those projects, like for this type of project. So we have an idea, the council went into the consultation process, and they come up with the idea, okay, we should finance this project. These were the key themes which we from the interviews we come up with like these are the main themes which discussed by the interviewees. So one of the main thing was like most of the interviews they were concerned about the revenue stream instead of the, like they have invested, like from the banking point of view, if they're going to invest into any project, how they're going to get back the investment or return on their investment. So this was the main I mean the thing was like how the revenue stream will be, or the cash flow will be generated from these projects. Other issues like zoning and consenting legislation, credit rating, housing charges, and infrastructure bonds are like there are also important key component, but you can see the cash flow and revenue was one of the main thing for those interviews. And even in this graph figure, we can see these are the extraction from the interviewees. So this was a percentage covered in those interviews. Like majority of them, especially banks, they were concerned about the revenue instead of housing charges, which was like household they have to pay that one. But from the banking and investment point of view, they were mostly concerned with the revenue. These are a few comments from those interviewees, and they thought like it's a kind of long-term money can be raised in New Zealand, and PPP type of approaches are not quite common in New Zealand. So they thought, okay, this is a good opportunity to fund those projects. And especially you can see transport is, sorry, most of the time that one is the major type of thing into our mind while we are talking about toll road type of things. But this was a kind of a very unique project, like putting in all those infrastructure into that project, and who is going to take that risk. Also, this was there was some aspiration, like how we can like provide those infrastructure and to cater for the needs of the growing population. So this was a kind of there were some technical issues around the things like covenants and restriction on and how we're going to finance those things, but it was like dealt quite well, like to make it more successful. Similarly, this was considered a bit of a kind of innovative model as compared to other sophisticated models used around the world. So it was a kind of thing which is funded by the different institutions which were having enough money, and sorry, so they were willing to fund this project. So you can see this housing charges is like a kind of a newer innovative vehicle to fund infrastructure, and can be used as a financing and financialization model. It is like it will help generate sufficient cash flow to finance other type of bulk infrastructure projects in New Zealand. And there is also a sufficient revenue stream. One of the most concerning issue for these long-term infrastructure projects because of different risk involved in those cash flow. So I think that's all from my side. Sorry for this sore throat. Our weather has changed from warm to this winter. We are almost in the winter season. So if you have any questions, please feel free to ask me. Thank you.
Thank you, Ashad, sharing with us your detailed qualitative analysis. Now the floor is open for discussions. Any questions?
May I ask a question?
Yes.
Thank you, Professor Javid, for your very interesting presentation. And I'm very attracted to your idea of capturing land values for founding infrastructures. And I'm very curious about the specific mechanisms of this value capture mechanism. And when I search the literatures, I've found one of the major obstacles of this kind of mechanism is to determine how much to charge for housing values for founding infrastructures. For example, how much to charge for infrastructures such as transport systems, and how to determine this contribution of land price increment, so that we can use this part of increment to fund sustainable expansion of urban transit system. So this is my question. Thank you.
Yeah, thank you very much. Actually, that one is quite relevant to the other topic which I'm quite keen to work on. Like that one is transit-oriented development, and in that way we can use a value capture type of thing. But for especially for this project, actually there was a kind of levy and development charges, which were like, instead of asking the homeowner to pay in a bulk, they ask them to pay within 30 years time. But it is, I don't know, I'm not familiar how they have structured that one with how they come up with the idea of, okay, they are going to charge $1,000 or $3,000 a year. So I'm not sorry, I'm not aware of that, the structure, how they come up with that one, but still, like the developer, they have to pay the development charges to the council to get some type. They are going to pay that one to develop those lands, to provide all those facilities before they are being issued those consent. And those development charges, they will charge from the homeowners or from the people who will buy those sections or those lands. So for this particular project, that was not the case. So that was like there was a special purpose vehicle was established, and they have to pay that development charges or housing charges within a certain amount of time. So I mean, there's another thing which can be I mean, on a negative point of view, like at the end of the day, end user, they have to pay the price. Either those are the development charges and the housing charges, which should be provided by the local council and by the central government. So I mean, but these types of projects are like by looking at the housing prices and housing crisis, we need to strike a balance between demand and supply. And if there will be any innovative way of providing more housing stock into the market, that may help to balance this demand and supply issue.
Okay, thank you.
Okay, thank you, Ashad, again for your presentation and the discussion.
Thank you very much. Thank you. Enjoy the rest of your presentation, and I will be just leaving. It's almost 7:30.
Okay, sure,
so
sure.
Thank you very much for providing this opportunity, and hopefully I will be watching some of these recordings, which will be available later on or on YouTube, as you have mentioned that.
Yeah, yeah. Okay, thank you.
Thank you very much. Thank you. Thank you. See you.
Okay, and now let's invite our next speaker, say Dr. Thierry, okay, from Switzerland, University of Applied Science and Arts, Western Switzerland. His topic today is urban growth from manufacturing to consumption and financialization. It's a case of China's contemporary urban development. Thierry, the time is yours.
Okay, so good afternoon and good morning for those who are in Europe. So first, I'd like to thank you, to thank Professor Li Jing for the invitation, and it's really a pleasure to be part of this symposium. So the aim of my today's speech is to present you a conceptual framework that I recently developed in an article that I am still applying into current research projects. And this framework basically addresses the relationship between the built environment and urban growth by putting together two separated fields of literature. On the one hand, I use the literature regarding the financialization of housing and real estate. And basically, this literature highlights that the built environment has become a key driver of a global finance-led accumulation regime, and that urban rent has been captured by finance capital actors and circuits as a result of increasing linkages between real estate cities and financial markets. And these linkages have various forms between and within countries due to different social and institutional contexts. And on the other end, I use the regional studies and economic geography literature, in which real estate is a byproduct of growth. Here, the focus is made on export sectors such as manufacturing or advanced producer services that typically drive local and regional growth, and that basically create urban rents based on agglomeration economies and on strong Keynesian spillover effects. And I specifically use the case of China to combine these two distinct fields of literature. In fact, to broaden the quite extensive literature you find in China's urban political economy, that has put land as the main driver for economic growth and the production of a built environment in China. And at the same time, I use the case of China as a reflexive theoretical tool to better combine these two fields of literature. And first of all, so the classical land-driven growth model has to do with the land value capture. As you all know, the sale of urban land use rights for urban development is the main source of financial revenues for municipalities. And at the same time, urbanization relates to an extensive urban planning based on large rural land grabbing. And so in this system of land value capture, local governments are committed to growth because land revenues are the only way to compensate the unequal fiscal system introduced in 1994 that mainly benefits to the central governments, while the cost of urbanization is at the charge of municipalities. Municipalities in China need to pay for basic utilities. They need to pay for infrastructures and various social services in terms of health, education, etc., etc. And the second point is that the local leaders, so the mayor of cities in China, are appointed by the central government. And their main duty is to increase the local GDP and implement the national urbanization policy. And what you have in literature, you have various concepts that are used to depict this kind of relationships between the central government and local governments since the early 90s. For instance, recently Fu Longwu advocated the concept of state entrepreneurialism to highlight the key role of the central government over local governments in urban development. And basically, the system of land value capture by local governments is conditioned by the demand for housing property. And the homeownership policy that has been implemented since 1998 has not only enabled the development of the real estate industry in China, but more specifically, it has enabled a permanent demand for housing, because housing has rapidly become a financial asset for urban citizens. Urban households in China have been massively investing in housing by buying multi-properties. And this investment logic has been enhanced by the provision of capital by the locally based banking system. For state banks, housing and real estate have rapidly become a main investment outlet. And for some authors, real estate development and the fact that housing is treated as a financial asset by urban households has become a key feature of the type of financialization you have in China, which at the same time functions as a key condition to land value capture by local governments. But there is another side to land value capture by local governments. Land is not only a revenue, but is also a cost and a debt for local governments. And to finance, in fact, urban infrastructures induced by rapid real estate development, local governments that until 2016 could not borrow money directly, they used various types of local governments investment vehicles. They created investment companies, they used utilities companies or real estate companies that could receive loans from banks by mortgaging land assets that that were provided by local governments. And I would say that this debt side of a land-driven growth model has been highlighted in the literature in relation to the rising local debts over the last decade, but infrastructure development has been rarely linked to housing financialization. And if we continue the story, the land-driven growth system can be represented as a growth cycle, which basically needs to be extended to take into account the fact that housing as a financial asset for urban citizens is the condition for land to function as a financial asset for local governments. But the cycle of urbanization and of rising land value can be fully understood if we relate it to the issue of urban rent creation. That is to say, to the types of driving activities that bring territorial revenues and that will induce spillovers and give value to land. And during a first phase of urban development since the early 90s, that still continuing, that is still continuing now up to in some extent, the land-driven model has gone along with export-based manufacturers' activities. You all know that since this period, China has become the world factory to supply the international market. And this was specifically based on FDI, the creation of special economic zones, first in coastal areas like Guangdong or the Yangtze Delta River, and together with low labor costs based on rural migration from inner provinces. But this period has also seen the rise of global cities in China, such as Shanghai, Beijing, Shenzhen, have become places for large companies' headquarters, for business services and financial activities. And this type of urban rent creation happened in relation to the development of mega projects, such as central business districts, as new urban centralities, and in relation with the significant role of qualified migrants that, in a way, are part of the so-called creative class. So we can say that this first phase of urbanization since the 90s up to now, based on production activities, manufacturing or business services, looks very much like the conceptualization you have in urban and regional studies. So first, typically cities and regions basically have to improve their competitiveness by exporting goods or services on global markets, which bring territorial revenues. And then these territorial revenues will induce many types of Keynesian spillovers in the forms of wages, taxes, investments, and various types of activities will develop to supply local needs in terms of consumption and services to people, as well as for housing and non-housing real estate. But scholars in that field of literature have figured out that the urbanization induced by spillovers from production activities cannot be taken for granted anymore. And this is because of the increasing mobility of people, both as residents and as consumers. So the point is that nowadays, people do not absolutely live and work in the same place. And most important, they tend to move more or less far away to spend money, not only to buy goods, but especially for leisure and tourism. So this scholarship highlights that because of the growing geographical disjunction between the places of production, generating incomes for workers, and the places of their expenses, the capture of people incomes produced somewhere else has become a key issue for local economic development. And I would say one of the key implications of what is termed as the presential and residential economy is to show that the significance of consumption-based activities in the rise of cities and regions that don't have a strong industrial base or don't have a strong business services economic base, or that have turned to non-productive activities to further develop, to position as places for leisure, to places for studying, for healthcare, for instance. And however, what is missing in this literature is real estate. In this literature, real estate is still considered as induced. Real estate is not really questioned, despite the increasing role of external demand for housing and the key role of having or developing infrastructures for consumption and leisure activities. So to address the key role of real estate in contemporary economies, we need, in a way, to turn to the literature about the financialization of the built environment. And here, scholars pointed out that these last 20 years, real estate has become a key driver of financialization. And what is first highlighted in this literature is the transformation of local investment circuits in real estate that were based on savings and credits, and that have been connected to financial markets, actors, and circuits. So now investment decisions are centrally made in the world's main financial centers that massively collect at a global scale the savings of people, the profits of companies, and the trade surpluses. And this implies that there has been a growing distance between the places of collection of money and the places of investment in real estate. And the issue for cities is to be attractive to this very mobile finance capital, which at the same time goes along with the rent capture issue by large financial actors and circuits. So rent can take place, or rent capture can take place directly or by direct investment in real estate by institutional investors such as pension funds or investment funds, or rent capture can take the form of debts of local government like municipal bonds, or of debts of households like housing mortgages that are sold on financial markets. And at the same time, this literature emphasizes that the mobility of finance capital, as well as the forms and types of financialization, varies according to specific local and national institutional context. And I would say that the second phase of China's urbanization since the early 2010 illustrates these various forms of combinations between production, consumption, and financialization. First, in fact, the classical production city model has changed due to the policy of upgrading the Chinese economy, both for the international market and increasingly for the domestic markets. Typically, special economic zones take not only the form of mega projects, but also of new types of cities that host high-tech firms and research centers. And so in this model, we are still in the production city model, and it spillovers on urbanization. But what really changes here is that development of these new cities is based on a massive attraction of external people for residency as well as for investment. And the second point is that urbanization tends to increasingly depend on spillovers effect from presidential and the residential economy in China. Consumption-based activities have been related first to mega projects such as large shopping centers or leisure and recreation parks, and then increasingly to new types of resorts and cities. And thus these new consumption places are very iconic of for me, the significance of consumption activities in today's urban growth in China. And these activities have become driving activities because they target not only local, but increasingly external consumers, extra local consumers and residents. And the rise of consumption places in China has been possible due to the growing purchase power of people and due to the growing mobility of people, which results from massive investment in transportation infrastructures such as high-speed trains, highways, airports, and investment in various types of infrastructures in cities, such as stadiums, conference centers, exhibition halls, that host in particular mega events. And for me, mega events such as the Olympic Games in Beijing or the World Exhibition in Shanghai have played a triggering role in enhancing the significance of consumption activities in urban growth in China. And the third point is that the second phase of urbanization, based on the increasing mobility of people, has also to be related to the rescaling of investment in the built environment. As I said, real estate development and rent capture could be boosted due to a massive speculation by urban households at a local scale. But now, this form of financialization tends to be organized at a cross-provincial scale. It is getting common for Chinese households to buy a flat located in another city in China. At the same time, in the case of mega projects in large cities, urban rent has been in some extent also captured by domestic institutional investors like insurance companies, as well as by foreign large investment funds. But the second and very important point here is the issue of financialization of the built environment that has gone along with the emergence of financialized circuits organized at a national scale, which enable to make indirect and more liquid investment. So typically, special investment vehicles like trust companies that are often affiliated to banks, investment funds, or crowd investing platforms collect the money of households, firms, and asset management companies all over China. And this or let's say, less regulated shadow banking circuit that developed because capital markets in China are very limited or state controlled. This circuit has progressively played a key role in supplying money in the form of loans to the real estate industry and to local government investment vehicles, while at the same time, the central government had restrictive conditions on banks to better control the land and real estate markets. And to conclude, what I want first to emphasize with the case of China's is that today's urban development has become very open and dependent on extra local scales in terms of production, consumption, and investment in built environment. And I would say that the case of China shows first that the creation of urban rents based on driving activities and the spillovers effects to induce urbanization cannot be conceptualized only from the perspective of manufacturing or business services, but has to include the role of consumption activities. So the many large-scale real estate developments with residential, retail, or leisure features you find in new towns, in large or lower-tier cities all around China have increasingly to do with a consumption city model based on external demands, which has been possible because Chinese people are increasingly mobile, both as consumers and residents. And the second point is that land value capture as the basis of a land-driven growth model in China must be linked to real estate and infrastructure financialization. And the types of financialization you have in China has to be viewed in relation to the increasing mobility of money resulting from a change of scale for investment and rent capture. As I said, on the one hand, real estate development increasingly targets non-local individuals as direct property owners, or investors. And while some large cities are very restrictive, many cities have an open market to non-local households investment in China. And on the other end, real estate and infrastructure development has progressively implied the money supplied by these non-regulated shadow banking and financialized vehicles that developed at a national scale these last 10 years. And my final point would be that the case of China highlights the need for a more transversal approach to address these local combinations between production, consumption, and financialization. So far, the literature about the financialization of the built environment has gone quite far in revealing the linkages between land planning, real estate, financial market actors, and local governments. But this literature has mainly focused on the rent issue capture. To better understand urban development in today's economy, we have to incorporate the role of real estate projects in relation to the types of driving economic activities and to the increasing significance of the presential economy, as emphasized by the recent literature in urban and regional studies. So these driving activities that basically create the urban rent that will benefit to property owners in first hand. And I would say that the key issue for let's say, further research relates to urban governance. So to what extent and how do cities face this growing dependence on extra scales for production, consumption, and real estate investment? And how do they cope with rising tensions on urban space due to a competition between local and non-local demands for real estate, both for use and investment? So thank you all for your attention.
Thank you, Thierry, for your extensive theoretical discussion of urban growth and, say, financialization, a very important topic about China, urban land market. So now the floor is open for some discussion. Any questions from the audience?
May I ask a question?
Yes, Professor.
Yeah, I think very interesting. I think this is a very important issue for China, understanding this urban financialization. So I think for us, we look at the Chinese case, okay? The very important issue is whether we have the risk of crisis, the bubble, okay? Because the housing price is so high, you see, it's a much higher, Shenzhen housing price now catch up with Hong Kong. And actually, many bigger cities in China, like Shanghai, Shenzhen, or Beijing, housing prices are higher than many other cities, even in Western countries. So we see the risk of the bubble. Even if you create a bubble, then have crisis, then it will be very disaster. So what do you think is the possibility of such kind of crisis in the future of China?
So I cannot predict this is going to be, I mean, this debate has been has a quite long story, in fact. We've been speaking about the Chinese bubble for more than 10 years, I would say. And at the same time, you can see bubbles and expanding, rising prices, housing prices in large cities in China. And on the other end, you also have overproduction problems in over cities, let's say more medium-sized cities in inner provinces in China. So in fact, you have a bubble issue and an oversupply issue at the same time, if you take the country on the whole. So yeah, so the government now has to in a way manage these bubbling and oversupply issues at the same times. And maybe because China has government has a lot of I would say how to say that in English, power or ways of directing or redirecting the economy. Maybe The idea would be to connect urbanization now with economic development, the types of economic development you could have, or the type of activities you could have in some regions or some cities, and at the same time to make possible or to influence the migration to these cities. So to in a way reduce the pressure on some cities, and then to maybe orientate or reorientate development in some cities that have an oversupply in housing. So this is the answer I could have.
Thank you for the discussion. Any other questions? Actually, Thierry is an expert in China. He has lived in China for many years, in Yunnan province. Okay, so if no other question, so thank you very much, Thierry, for your presentation and discussion.
You're welcome.
And thank you. And our next speaker is Dr. Wang Ziyou from is now in UK. Is from Coventry University, London, and his topic is housing under shock: the evidence of the pandemic. Dr. Wang, the time is yours.
Okay, thank you so much for inviting me here, and it's really nice to see everyone here. And good morning and afternoon, as well as evening to everyone here, because usually we share the different time zone, right? So I'm going to share the screen. Just give me a second. How to share the screen? Okay. Yeah, this is the first time for me to use Zoom to present. Just find it. Oh, yeah, this one. Okay. Can you see my screen now? If it works, you should see a PowerPoint. All right, great. Let me just enlarge it. Okay. Yeah. All right. So today's topic for us, or from us, from our project recently, is the housing under shock. So basically, this is a pilot project, and actually we have two authors in this project, and the leaders is the Dr. Yao from the Sheffield Hallam Universities, and also she applied for a fund, and so we have granted this fund from her institute, which is Sheffield Hallam Universities. Right. But he don't have, she don't have time. There's a time conflictions due to the department meetings kind of things. So Dr. Yang, unfortunately, she cannot present the paper with me. So basically, I will take in charge of full presentations. So today's topic is about the housing under shocks. Understanding how urban households make their housing choices has been an important focus in urban economics, right? So there are many papers talking about how people come to decisions, regarding the housings, as well as, at the same time, they need to have decisions on the non-housing consumptions as well in their daily life. And while there are not many papers talking about how people respond to shocks in the housing market, and among those papers focusing on the shocks, usually they will focus on, or the majority focus on the internal shocks, such as the price shock, volume shock, or demand shock, or as well as the financial crisis. So you can see all of them are actually internally or endogenously derived from the evolution of the economy, right? Or sometimes they may focus on the natural disasters like wildfires, tornadoes, earthquake kind of things. So basically, those are the natural disasters that, although they are unforeseeable, but they are frequently incidents, right? So basically, you may have your expectations, only the individual expectations, but also the market expectations that sometimes we may have some natural disasters in the local area. So you will have these market expectations embedded in the market activities. But there are not papers to talk about how people answer to the external shocks, where the shocks is not foreseeable, and also actually sometimes even we don't have any clue about how they emerge or why they emerge, right? So in that case, we try to answer these questions. So basically, you can see nowadays the COVID actually from the advice side, unfortunately, it will cause a serious epidemic disease, and people across the world will suffer from that. But look at the good out of the bad side, you will see that actually COVID provide a typical shock that external to the economy or the housing market. So basically, it will provide you a vivid example for us to when we need to study how the housings or how the housing choices have been made under the external shock, right? So there's some, I think that there are not many papers talk about the external shock as well as the COVID, the effect of COVID, and some early evidence from the newspapers or some pilot studies in some journals suggest that price and demand has been falling rapidly, but it's not applied to all of the areas. Some other areas may not have this experience or have not yet experienced those effects. And I mean, by contrary, you can see actually some areas or some countries or some markets can be observed with an increase in the demand of housing, or even there is a price, there is a rapid rise in the price as well as in the demand. For example, in the UK and US, if you check the status, the data or the statistics, you can find that actually in the UK we are experiencing a rise in the housing price. It's like 5% for the annual returns, right? So the backgrounds behind all of this project is that you can see that the COVID-19 pandemic has brought several recessions to the economy, and it shows a vivid examples that how the external shocks will cause a significant impact on not only people's lives, but also their housing choices, right? And there are the two channels, or we can see there are two aspects in this process. The first one is a direct channel or direct effect of the COVID. So you can see that this COVID will cause difficulties for people to join the housing service in their daily life. For example, the ongoing transactions has to be suspended in the housing market due to the lockdown, right? And on the other hand, we have this indirect effect that will cause uncertainties. For example, the income uncertainties, the uncertainties in your daily expenses or in your some specific expenditures. For example, the income cost, people may face these reductions either in hours or in earnings. For example, some of the people's contracts have been turned to part-time from full-time, so you will see there is an income cut. Also, there is a rise in the expenditures, right? So there you have to maybe spend more on the groceries or utility bills if you stay at home, and also you may just increase your expenditures on remote studies or remote learnings, right? Because nowadays the lockdowns will restrict students from coming to the universities or colleges. And also there's uncertainties in the household's wealth, right? So probably they will reduce the savings and they also have a liquidity risk. But it's actually there's a difference between two groups. One is low income groups and the other one is high income groups. For the low income groups, they have response to the crisis by using their savings. So probably they will increase their expenditures to fund their, or to fulfill their daily expenses. especially when they see the reductions in earnings or working hours. But I mean, in comparison, you can see the high income groups may actually accumulate some savings in this, I mean, during this crisis, because, I mean, before they may spend a lot of monies on some consumptions like eating outside, or may just go to some recreations or spend some leisure activities. But the lockdowns will prevent them from doing so. So they've been to save more compared to the low income groups. So they will, I mean, the COVID will generate these uncertainties in the household's wealth, right? And also these two things, or these two aspects will cause the housing issues. One is the affordabilities, and second, how people will make their decisions on either changing their tenure choice or not changing their tenure choice. So basically, there are two issues we'd like to discuss in our project. Right. So our research aim will focus on how the pandemic deepens the housing affordability issues in China. So there are three specific objectives. One is to see how the economic and housing factors affect the housing affordabilities and tenure choices due to the effect of the COVID. And the second, we will look at the effectiveness of the housing policies and how these housing policies will alleviate or maybe deepen the issues in the housing affordabilities and tenure choices. And also we're trying to find the regional differences between the two cities. And yeah, so in this project, we have two focus cities. One is Wuhan and the other one is Nanjing. So we, the reasons we choose these two is that Wuhan is the most serious, always the city where the people suffer the most seriously. And all we have is this severe disease in the Wuhan. And compared to Wuhan, Nanjing is not far away from the Wuhan, and actually the Nanjing shares the similar features with Wuhan, like, I mean, in terms of the populations, in terms of the average disposable incomes or the average education level, right? So we choose Nanjing like kind of like a control group, and Wuhan like the treatment groups that suffered from the COVID most. So, right, so we try to find whether there's a difference between these two cities in terms of the housing affordabilities as well as the tenure choices. Okay, so there are two main aspects in this project. One is the uncertainty, and actually we followed the logic as being mentioned in the 2011 papers, which was published in the China Economic Review. So uncertainties will have an effect on the housing affordabilities and the tenure choices, even in the daily lives. So basically, there are two main reasons. One is that China is at a stage of the economic transitions. Basically, we will experience these reforms of the income distribution systems, medical security systems, as well as the educational systems that will brought. I mean, that has been brought the uncertainties into our daily life or our daily expenditures, and also it's quite an echo with the life cycle model or life cycle assumptions that the rational consumers or the residents are willing to save more money for future expenditures if they are experiencing uncertainties, and as well as they are affected by those uncertainties. And also, the author argued in the papers that because we have this reform of the housing distributions, those uncertainties will have a significant influence on our tenure choices. Right. So that means three reasons that why we need to look at the uncertainties when studying the housing affordabilities as well as the tenure choices. So in our project, we focus on three things. One is the income uncertainties, and also we have the educational uncertainties as well as medical uncertainties, That is because, first of all, obviously we will have this income. Obviously we will have this change in the income status. So that's why we focus on the income uncertainty first, and we goes to the educational uncertainties, because you can see that the for the traditional Chinese households, as well as the lockdown, will change the learning styles as well as the learning ways. So basically, you will see there's a dramatic change in the educational expenditures in the case of the COVID. And also the COVID directly related to the health as well as the disease. So basically, people may have another substantial change in their medical expenditures. That's why we focus on these three uncertainties. One is the income and education and medical expenditures, right? So in the theoretical frameworks that, because I mean, in this project, we focus on two outcomes or two things. One is the housing affordability issues, and the other one is the housing tenure choice. So in the previous literature, you can see that actually we have already have some discussions on how people or what will be the reasons for the issues in the housing affordabilities. For example, the housing expenditures exceeding 30% of the monthly household incomes. Actually, this 30% has been considered as the thresholds for, or has been defined as a threshold to define the housing affordability issues. Basically, if you have spent more than 30% of your household incomes on housing, then probably you may have issues in your in terms of the housing affordabilities. So that will lead to the first issues in our project, that is that people may face difficulties in paying for the rent or facing the mortgage default. And second, there will be insufficient residual incomes after deductions of the housing expenditures. So basically, you don't have enough money, or you don't have enough budget for your non-housing consumptions. That will lead to another difficulties. It's not directly related to the housing consumptions, but like the indirect relations with the housing consumptions, because if you don't have enough budget for your non-housing expenditures, basically you will have deductions in your total utilities that will associate with the housing services or housing consumptions. And third one is the credit or liquidity constraints or the down payment constraints due to the COVID or lockdowns. So basically, the whole markets, especially for the financial markets, the functions may not work well, or maybe you can see that there are a lot of suspensions for the mortgage applications or for the housing transactions. So basically, the market functions may not work well due to the lockdown or due to the COVID. So that will lead to another difficulties for people who would like to transact their housings. So basically, you will see there's a housing purchase or housing transaction has been suspended or postponed. And also, some people may not be able to receive housing benefit or housing allowance anymore during this COVID-19 pandemic. And also, sometimes we will see there's unexpected activities such as the evictions. So basically, those evictions may create, I mean, before they may not create obvious problems, but during this COVID-19 period, then you will see this becomes obvious problems and also dramatic issues to the local communities, especially for those low-income peoples as well as the minorities or the migrant households in local cities. Right. So there are 5 dimensions in our issues of housing affordabilities in this project. And in terms of the housing, the tenure choices in this project, so basically there are 2 main driving forces for people to reconsider their tenure choices. The first one is the issues in the housing affordabilities. That is the previous objective in the last step. And you can see that housing affordability issues will have interconnections with the tenure choices. Basically, if you suffer from some difficulties in the housing services, probably you are going to reconsider your tenure choices. And also from this 2011 papers, you can see that uncertainties will also have significant roles in people's decision-making process in terms of the tenure choices. That's the two aspects or two driving forces for people to reconsider their tenure choices during this COVID-19 period. So this, I mean, the second research objective in our project will focus on the tenure choices. And these tenure choices will be a final choice variables in our regression analysis. And I will talk about it later. Okay, so we collect the data actually from online survey. So basically this online survey has been conducted during this COVID period between the June of 2020 to October of 2020. Actually, we have two rounds of the survey. The first round is the trials round. So basically, we collect 100 copies of the questionnaire from each city. So basically, we have two cities here, Wuhan and Nanjing. So basically, we collect 200 for the trial round. And also we collect another 2,000 copies in the standard round, and we found that there's 1,602 valid copies or valid questionnaire, because in the questionnaires we have set up several questions to check for the validity of the questionnaire. So basically, you can see in the final data set we have sorry. We have more than 800 observations from Wuhan cities, and we have nearly 800 observations from Nanjing cities. Right, and also we have the sample checking. So basically, we're trying to see whether the samplings or the samples we have actually align with the demographic and economic characteristics in both cities. And that's the good news is that roughly we have this we have passed this sample checking, indicating that actually the samples are quite similar to what we should have if we conduct randomly sampling from the local cities. Right, so in the questionnaire, we have a lot of questions, and we ask for like the demographic factors like the job status, commercial status, household size, and household status. And also we have asked for the non-housing consumptions, for example, about the educational expenditures as well as the medical expenditures, and also, for example, the house status for the household. And also we have the housing status, like housing expenditures, conditions, and tenure, the previous tenure status and the current tenure status. And also we have the policy variables, that will be the housing provident fund, which is HPF, participations and the monthly deposits for this HPF. And also we have the questions for the housing difficulties, but that will be our dependent variables, and I will talk about it with more details later. Right, so there are two parts in our project. One is the housing affordabilities, and the other one is the tenure choices, right? So we have several measurements for this housing affordabilities as well as the tenure choice. One is the main question for housing difficulties is to ask people about what kind of the difficulties they have experienced during the pandemics, right? So basically, there are 8 different kinds of the housing difficulties for those interviewees. Right. And also, we have categorized those housing affordable difficulties by the factor analysis. Basically, we run a factor analysis trying to categorize those difficulties into 3 categories. So basically, we have the financial related difficulties, which specifically you will see that option 1, option 3, and option 5, they are the financial related housing difficulties. And also we have this market living environment. So basically those are the it's kind of the environment has been affected by the COVID or the pandemic. So that's the difficulties directly related to the environment rather than the financial aspect. And third, we have the supply-oriented difficulties. So basically, those are the difficulties due to the supply side. So basically, those consumers suffers from those difficulties because of the problems with the supply side. So that will be the option 4 and option 6. You will see that people have to postpone their housing purchase probably because the suppliers or the sellers seize the whole transactions, or markets, or the suppliers of the loan or suppliers of the mortgage, they seize the transactions or the mortgage applications during the pandemic. So basically, there was either leads to a credit constraint or liquidity constraint, or the seize on the mortgage applications in that case, right? And also we have this housing affordability rate or housing affordability ratios that is defined by the ratios between the housing expenditures and the household's income. So that will give you the proportions of the household incomes has been expended on the housing expenditures. That will be the widely or commonly used definitions for the housing affordability ratios. And that will be the dependent variable for the model 2. And for the last model, that will be the tenure choice analysis. So there's, I mean, it's like we have 5 options for all the interviewees. Then we have whether they are going to consider about upgrading their properties or upgrading their housings in terms of the size or the quality, or speeding up their purchase plan, and or they may have to postpone their housing purchase plan, or even downsizing the properties. I mean, in the presence of housing difficulties, or they may choose not to change their current tenure status. So in the sums, that will be categorized. I mean, these 5 options will be categorized into 3 categories. So you can see we have this upgrading, or we have no change, or we have this downsizing for people to choose. I mean, and also this outcomes has been confirmed by the factor analysis as well. Right, so basically this will be the dependent variables for the model 3. So you will see we have these categorical variables for model 3. Right, so in the model 3, you will see there are several analyses, and we actually, in each analysis, we just use one as dummy variables to focus on a specific choice, or we use ordered probit models in order to see how these 3, I mean, in nature, they have ordering in the choice. So let's see what will be the probabilities or the likelihoods that people may move from the current situations to transit to another situations. Right. So basically, there are 3 models in our pilot studies. One is focused on the housing difficulties, and also we focus on the housing affordability ratios. And finally, we will focus on the housing affordability the tenure choices in the model 3, right? So here comes to the results. So basically, you can see the different groups of the variable of interest has been highlighted by different colors. So the first group, you can see, is the point here. So you can see the first group is about the uncertainties. So in this group, you can see what will be the effect of the uncertainties on people's making their decisions, right? So first of all, you can see the uncertainties will always increase the likelihood of experiencing difficulties, especially for the financial related housing difficulties. You will see all the three uncertainties will have a significant as well as the positive relationship with the likelihood of financial related housing difficulties. And also for the market living environment induced difficulties, we have these medical expenditures, or specifically as is the uncertainties in the medical expenditures will increase the likelihood of the market or living environment induced difficulties. And for the supply-oriented difficulties, you can see the education expenditures has a significant and a positive role to increase the likelihood of the supply-oriented difficulties. For the housing policies, you will see actually housing policies will alleviate the likelihood of experiencing those difficulties. So basically, you can see all of these coefficients have a negative sign, and some of them are significant. Right, so basically they place significant roles to decrease the likelihood of facing difficulties during the COVID. And third, the third group is about the current housing status. We have ownerships, we have the rentings. Basically, those shows the current tenure choices for the households. If households own a house, then probably they are less likely to face difficulties in this case. And if people renting the house at current point, then probably renting will increase the likelihood of facing difficulties in the current situations. And also the CUHK will bring some benefits for people's, will not bring the benefits for people's actually when talking about the difficulties in the housing services. So basically the local, if you have the local rights to, if you have the local CUHK in the local areas, then probably you will be suffer from this local CUHK. So basically the CUHK will not bring the benefits in this case. It's quite interesting because this is like a counterintuitive findings compared to the previous literatures that usually the CUHK will bring the benefits to the local residents in many studies of the housing affordabilities or housing difficulties. I think that the potential reason for this finding is that because, due to the lockdowns, if you have the local CUHK, then probably it means that you have more restrictions, for example, in terms of the mobilities or in terms of the options you could choose, because you are restricted to stay at the local cities, cannot move to other place or move to the suburban areas in that case. So basically those will be more restricted from the local CUHK rather than benefit from the local CUHK. Right. Right, so the second group of the findings will focus on the housing affordability ratios. Basically, you can see the uncertainties will decrease the, will increase the housing affordability issues. Basically, if you have a higher rates, it means that you will spend more on the housing expenditures, right? So basically, you may not have a very healthy financial status in terms of the housing expenditures. So basically, those uncertainties will increase the issues in the housing affordabilities. And second is about the HPF policy or the housing policies. You will see this quite shows a quite interesting findings. You can see that the dummy variables will give you the positive coefficients, but the continuous variable, which is the deposit for the HPF, actually serves as a negative relationship. Basically, you need to you need to look at both of these coefficients together when talking about the effectiveness of the housing policies. So if you have the if you are involved in the HPF, it means that it will probably increase your issues in the housing affordability. But if you have higher deposits in HPF, that will decrease your issues in the housing affordabilities. And the third group is about the current tenure choice. Basically, you can see that the ownership probably will decrease the housing affordability issues. And rentings, by contrarily, you can see rentings will increase the housing affordability issues. That actually echoes with our intuitions as well as the previous findings in the previous literature. And also the HOCO will bring some benefit for you to deal with the housing affordability issues. So basically the HOCO will guarantee you an active relationship with the housing affordability issues. And also the dummy variables for the regional locations, that is the Wuhan variables here. So you can see from the findings, or you can see from the coefficients of these Wuhan variables, we have positive variables indicating that the actually Wuhan residents in the Wuhan may suffer from the COVID in the case of the housing affordabilities. Sorry. So the last group of the findings regards the tenure choices. So what will be the future tenure choices, or what will be the decisions for what will be the change in the tenure choices due to the COVID for those households in Wuhan and Nanjing cities? First of all, you can see the uncertainties plays a different role. In each analysis. So we can see, for example, the medical expenditure, the uncertainties in the medical expenditures will decrease the likelihood of upgrading for the households, as well as it will decrease the households to downgrade their the current housings. That is because this shows that you can see these two columns here actually indicates that people in those cities are less willing to either upgrade or downgrade due to the uncertainties or due to the increase in the uncertainties. And also the third column actually echoes or confirms the previous findings. Basically, in the third columns, we put the no change. So the people are willing to not to change their current situations in the sub-columns or in the analysis of the sub-columns. So basically this should, or they are expected to have opposite sign compared to the previous two columns. Basically you can see the previous two columns we have a negative sign, and in the third columns we have a positive sign, and also this education uncertainties shows a significant growth in the likelihood of not to change their current situations during the COVID. Right. And in the last columns here, we use the ordered probability models or ordered logic model, but the findings for the ordered logic model hasn't presented here to save some place. So basically, you will see the uncertainties in the medical expenditures will decrease the likelihood of changing their status. Basically, by using the ordered probability models, you will see that you will see the likelihood of people changing their current situation or current tenure choice. So basically, the uncertainties in the medical expenditures will decrease the likelihood of changing the current uncertainties. That will actually sorry. Echo with the previous two columns. Right? And on the other hand, we have the housing policies variables, which is the dummy variables for involvement of the HPF. as well as the continuous variable for the deposit of the HBF. So basically, you can see we have this the similar findings. This findings is similar to the previous slides. So basically, you need to look at these policies, the effective policies, by looking at the combinations of these two variables. So for people who are involving in the HBF, probably they will they are likely to upgrade their housing status, and also less likely or less willing to downgrade their housing services, as well as they will keep the current situations in sometimes. Right. So basically, if you're involved in the HPF, it means that households are less willing to downgrade, but more prefer for the upgrading or no change the current situation. And also the deposit, or if you have a higher deposit in HPF, probably you are going to you are less likely to either upgrade or downgrade. So basically, you are more willing to maintain the current situations. And for the ownership and rentings, in terms of the current tenure choice, you will see that if people currently own a property, probably they are not going to change their current situations. But if people rent a house during the pandemic, so probably they are going either to upgrade their housing services or either to downgrade their housing services, probably because the housing difficulties. Basically, you will see that the household who rent a house have more flexibilities in terms of the housing tenure choices. And also the HUCO will benefit the households in the local cities. Probably they will increase the likelihood of upgrading or downgrading. So basically they will promote people to transact their house as well as involve in the housing transactions. And also you can see this negative sign, and negative sign actually echo with the previous two columns, because people are less likely to maintain the current situations if they have the local HUCO here. Right. And for the residents in the Wuhan, you will see that actually households in Wuhan compared to Nanjing city, compared to the households in the Nanjing city, they are less likely to upgrade or they're less likely to downgrade, probably because the low efficiency in the market functions in the Wuhan city. Right. So in the sum, there are there are three main there are three main objectives in our research project. One is the uncertainties, or what is the effect of uncertainties during this COVID period, as well as what is the housing policies, how these housing policies will affect people's decisions in terms of the housing affordability issues, as well as the housing tenure choices, as well as the home ownership, whether these home ownerships will benefit people to alleviate the difficulties or to alleviate the issues related to the housing affordability during the pandemics. And the last thing is we focus on the regional difference between Wuhan and Nanjing. Basically, the Wuhan is a city where people suffered most from the COVID, and the Nanjing may have slightly relief in terms of the level of the seriousness of the epidemic disease due to the COVID. So basically, you can see, sorry, right. Those findings have answered our research objectives that has been mentioned in the early stage of this presentation. And in the future, we are going to, the ideal case for our project is to have the household survey data instead of the questionnaire survey data from online interviews for the future studies. Okay, so I may stop here. Thank you for your listening, and we'd like to welcome all the questions or any comments. That'll be really welcome. Thank you so much.
Okay, thank you very much, Zio, for your interesting research on a very hot topic. I have a quick question and a quick comment. The question is, about your data. Actually, you collected the data between, I think it's June to September, right? So, is the data, about, those perceptions, feelings of those respondents during that period, or their perceptions about the period, at the early of 2020, where, the situation, for example, in Wuhan is more severe. So what are the time period? And a quick comment is because you talk about, the relationship between CUHK, for the bit in your first model, where the relationship is positive. I'm wondering if you have, for example, compare, now you put the dummy Wuhan and see the aggregate data. How about, compare the two cities, because each you have about 800, and see whether the relationship of, because you mentioned lockdown, okay, lockdown is maybe a reason for that positive relationship. So if compare Wuhan and Nanjing, whether there will be difference in the relationship. So that's the comment.
Okay. So for the first questions, actually, in the questionnaire, we asked people to provide data for two periods. One is the period before the COVID. So basically, we asked what would be the annual incomes, for example. We asked what's the annual incomes, what's your medical expenditures, what's your education expenditures before the COVID. So basically, what's the annual incomes in the end, at the end of the year of 2019. So basically, you will have the data before the COVID. And also in the questionnaires, we also asked them for the data for the situations in which they what has happened to households in terms of the annual incomes at the beginning of the 2020. So basically, we have the data. So we have the data before the COVID, and also we have the data during the COVID. Right. So for every household, so basically, in that case, we can have comparisons, or we can have a panel data to show what will be the effect of the COVID and what will be the effect of each housing and economic factors during the COVID, because you can have the comparison before. Have a comparisons between the data before the COVID and after COVID, or during the COVID. So that is our design in the questionnaire. But I have to admit that by using such kind of the questionnaire survey or online survey, probably you will see there's some let's say the survey bias or the observation bias in this kind of the survey. So that's why I say that the ideal case is that we may, in the future, we may use the household survey data. Currently in China, we have several resources for this kind of the household survey, right? So we have kind of the housing survey from Shanghai Jiao Tong or Fudan Dashi, or maybe from Xinnan Caijing Dashi kind of things. Kind of universities, they already have massive household surveys. So probably if you have those survey data, probably we can have the whole pictures of how people make their decisions between housing consumptions as well as non-housing consumptions. Then we may have a better results, or maybe have more solid results from those data. So like I said, this is a pilot study. So basically, actually, we don't have the data now because still the lockdowns may restrict people to conduct such a survey, as well as we don't know that whether this COVID will have a long-lasting impact on the households' daily life, as well as the whole economies, right? So basically, we don't have the data now, and we don't know whether this data will correctly reflect the the short run or long run impact on housing consumptions, non-housing consumptions, or the daily life. So basically, right. So we have to use these questionnaires away at the current stage. And as for the first questions and second questions, let me just move to the first table here. And sorry, could you repeat your question again? For the
I mean, have you considered comparing, say, Wuhan and Nanjing's data separately and see if, like, the signs for Hukou has any difference? Because now it's positive, and you say it's because of lockdown, so people may have actually increase their difficulties. But Wuhan is actually much more severe than Nanjing in the case. So if there's a difference in between the two.
Oh yeah, actually we have interactions between, so interaction terms between Wuhan and Hukou in our new analysis. But basically, this is a previous version of the findings. And in the current versions, we have added these interactions into the models. But the problem or the issues with these interactions or the issues from the statistical perspective is that because you can see from here, we currently use the probability models, right? Either use the probability model or logic models to find, because the dependent variable is a dummy variable. Right. So in that case, actually, you can see the number of the observations. Currently, we have 1,600. And if we, for example, if we conduct a subsample analysis, basically for each city, probably we have 800 observations. And when you increase the number of independent variables, especially when you increase the number of dummy variables in your probability models, probably they will cause some issues. I mean, from the in terms of the statistical inferences. Yeah, but I mean, we will have a try. Actually, we have a try on involving interactions between the Hukou and the Wuhan. So basically, we're trying to see whether there is a regional difference between Wuhan and Nanjing in terms of the Hukou benefits. And I think the result shows that there's no difference between the Wuhan, or the interaction, the coefficients for the interaction terms is insignificant, although it shows a positive, I think it's a positive coefficient. Basically, that will indicate that Wuhan may have the residents in Wuhan or households in Wuhan are more likely to be suffered from the housing difficulties compared to the Nanjing residents. But yeah, in the future, we will add this into our analysis for model 1. Yeah.
Okay, thank you very much. So
I think in the no, not one. Oh no. So basically, this is, sorry, I'm really sorry about that, because I think this is a previous version of the findings, and we I think we haven't presented the we haven't presented the coefficients for the interactions terms between Hukou and Wuhan. But I think, yeah, that's a good point. And it's really important point to see the regional differences between Wuhan and Nanjing, especially when we talk about whether there's not in terms of the regional differences, but also in terms of the level of the diseases that affecting the different cities. So yes, it's more. It is really important to involve these interactions between Hukou and Wuhan. Yeah.
Okay, thank you very much for your discussion, and I'm aware of the time, so thank you again, Ziyu, for your interesting discussion and presentation with information about the impact. Okay, so thank you. And next, which is also it's our last speaker, also from UK, Dr. Xu Yishuang from University of Manchester. and her topic is also about COVID. How would the COVID pandemic reshape retail, real estate, and high streets through acceleration of e-commerce and digitalization? So Sherry, the time is yours.
Hello everyone. Again, good morning and good afternoon. I think it's a long day, so I will try to make it short. Here I'll share my screen. I hope everyone can see it properly. So thank you again for having me here and inviting me to present my paper. And it's a collaboration between me and my colleagues, Anupam and Feng Chen. And the topic is, sorry, I need to the topic is how would COVID-19 pandemic reshape the retail real estate and high street through the acceleration of the e-commerce and digitalization. So first of all, I'd like to introduce the author a little bit. So Professor Anupam Nanda is a professor in our university and our department. He's one of our members of the team and also a member of the Manchester Urban Institute. And he is also a member of the board of ARIS. And me, I think I'm very familiar with all these friends. I'm a lecturer in real estate in the University of Manchester, and I'm also a member of MUI. And I'm interested in the research in urban development, real estate economics, and finance. And Feng Chen Melanie is a lecturer in built-in investment strategy, market networks in commercial real estate sectors. So this paper actually is the a very first paper from our team in doing real estate after, no, not after, but during the shock of the pandemic. We have been producing 2 very short comment paper on the pandemic shock on the real estate sectors. But this is the first one to really have a deeper look at retail real estate. So I'll introduce the research background and conceptual framework and some previous studies which is relevant, and also our methodologies and the results. So here. So the background is quite simple and straightforward. As we well known that in e-commerce, let's say online shopping and digitalization in urban area has been happening for over 2 decades. And we can notice that we cannot really ignore it, because it's really making a lot of changes of the consumer behavior in retail, and also it's actually pushing up the evolvement of retailing in the industry. And as a consequences, it's reshaping the high street landscapes. I think you can see very significant reshaping happening in Asian country. Of course, it may be European, especially in the UK here. It's a bit slower in the past 20 years. But in this year, you can see very dramatic change of the high street landscape changes. Because this year, not this year, last year, we have the pandemic. And as mentioned by Zio, we have lockdown. Several times of lockdown, and although right now the lockdown measures has been lifted, we are still need some social distancing rules in place, and part of the retail has been reopening again, and we are still awaiting for next week the announcement from the government to see if we can release the lockdown measures furthermore. So all of these measures actually change our behavior in enforcement way. We can't really behave against that, so we have to accept it, and we also have to embrace it. That is why we can see a lot of movement to multi-channel retail, to see the channel integration role of the physical stores, no matter it's in shopping center or in town center, the high street in town center. And in a way, we can see the transformations in the urban retail landscape. I can see a lot of retail spaces, especially the smaller one on the high street, actually closing down and try to convert to some other uses. So this is kind of the transformation. It's a kind of the trying and trial stage of the urban landscape changes. But eventually, what will be the final result? That is the thing that we hope to figure out, and that's a question we want to answer. So here comes the question. With all these technologies and online shopping platform, and also the changes of the consumer behavior, is it leading to an end of the high street stores? Because there are so many newspapers talking about the death of the high street stores. And we can also see a lot of activists, actually very interesting, in the UK, calling up the support to the high street stores. But you see, this is not how the market works. If we want to use the mechanism from the market, we can't really just use the support to keep the high street going. We need to see the changes. We need to really find a way to suit high street store to the new consumer behavior. That's to combine the role of the physical store and multi-channel retailing. And also we are asking, what does that change mean to the real estate as shopping centers and high street stores? Because we can see maybe it's not happening everywhere around the world, but it's happening here in the UK. Early this year, the government actually relaxed the planning rules, making it easier for the developer to convert the commercial buildings into housing, into residential uses. That is, in a way, very sad to see. If you see no high street again in the village, in the town center, but only the commercial, but only the residential properties, it's a bit boring, to be honest. But to see from the other way of the landlord, or say the developer side, they are actually chasing the profit and return from the property, from the space. If the landlord cannot collect, let's say, sizable amount of rent, they would be very likely to convert their retail property into residential property. And it seems that the government is kind of in line with that. But also we have some other voices here. This is another news from Guardian. And they are questioning that whether converting shops or say the high street retail stores into flats, especially in big city, could lead to some low quality homes. Because as you just mentioned, during the lockdown, during the past year of the pandemic, actually we see significant rise of the housing market here in the UK. There are of course multiple forces behind it. But as I said, if the developer actually chasing the profit and converting all the shops into flats, those kind of flats can have lots of problems like the noise, the privacies, and other energy efficiencies, etc. So this kind of low quality homes will be going to the market and push the first time buyer to buy it. It's not really fair or equal. It can lead to some inequality issues. So in a way, we hope to keep our high street store alive and thrive again, but we also need to figure out how, in what way we can do it. So here we try to figure out what kind of changes are around and what kind of thoughts are actually in academic and in industry right now. So we review several literatures from the aspect of technology and urbanization, and we can find out that the key drivers of the retail business, and also that is a key driver of the changes of the retail business here in the UK. And also we see a lot of literature talking about the emergence of the online platform, let's say online shopping, and also other omni-channel retailings switch to online retail. So we hope to investigate how the retailers are really looking at this kind of changes. And of course, during the past year, there are lots of working papers and publications talking about the pandemic's implications, not only in the housing market, but also in the commercial property sector. So we reviewed those papers, those publications, and found out that the pandemic is really a shock to the market in a good way or a bad way. But also it's kind of a pushing force and acceleration, especially to the retail property sector. That is why we are leading to the thought of reposition the high street stores. I say that the high street in a village center, in town center, or even in the big city. And this is not repositioning the high street is not a new topic actually. Back then 10 years ago, it's a hot topic in the UK because all the shopping centers are booming in a kind of US style. And people are thinking whether we do need such kind of shopping center in place and in such density. And then they are thinking to thrive and to revive, let's say, the high street in the British style. So back then, 10 years ago, they have been thinking about the repositioning of the high street in the UK. And right now, it's another stage, it's another timing to think about it again, because we are now facing the same kind of emergency and crisis right now. And we actually map that kind of a theoretical framework into a retail real estate here. So here is our conceptual framework. We think about this issue. We think about retail real estate changes from 4 aspects. From the consumer's preference, of course, retailing is all about the consumers. We need to think about their experience, how to engage them, and they have many of the choices and what they are going to choose. And we hope to provide the proximity for the consumer's choice. And we hope to combine the physical and online options to the consumers. That is how to push them, or say to lead them to make consumptions. And also the technology platforms are very important for every retailers. All this seems kind of only relevant to the retailers, but also because they are using the retail space, because they are using the retail real estate to sell their goods. So it's also relevant to the real estate, the retail real estate, let's say the high street stores. And the secondly, we are thinking about competitive landscape. As I said, the new conversion laws are in place, so it's easier to convert. It's quite easy, to be honest, to convert retail shops to residential, because it's all low rise here in the UK, especially on the high street. So there are no technical difficulty here to make the conversion. But would that be wise? Would that be a sustainable way to restore our urban landscape? That's a question. And this kind of new competitors types actually is a threat to the retail real estate. And we hope that with the change of the reposition of the high street, we can keep our high street in town center, in city center, and in the village. Of course, this will involve the adoption of technology and adoption of the change of the space. And talking about space, thirdly, we think about the space market changes, not only in the residential, but also in retail. Let's say people actually change their preference of living during the pandemic, especially during the lockdown in the UK. We can see lots of surveys around in the UK, and we ourselves also produce a paper about the changing of the living preference in the UK at the beginning of the pandemic even. So even I think at that timing, it was only 3 months after the first lockdown in the UK, people are already very eager, very keen to move to countryside, keen to have bigger spaces, keen to have garden, to have some outdoor green space to walk, because they can't go anywhere else. So this kind of residential location decisions are changing. And also we have better technology, we have better digital connectivity, even in the countryside. And the government are providing new amenities to the customers and the retailers. So in a way, the town centers high street store from our opinion, are more likely to be kept and thrive again. However, maybe the shopping centers will be facing more difficulties, as maybe many of you have already heard that into the very biggest European retail REIT has actually got bankrupted, and several of the shopping centers that in their portfolio has changed the owner already. So this kind of changes actually are happening on the space market and also related to the real estate, to the retail real estate. And lastly, we also are thinking about the landlord and landlord side, or from the investors angle, because they are more involved in the tenancy management. And right now in the UK, we are talking about the change of the leasing contract, because maybe it is very special here in the UK, because when I was in Hong Kong, I'm quite used to the turnover rent for all the retail real estate. But here in the UK, we are still doing the fixed rent for a very long time period of contract, and review maybe every 5, 10, or 15 years. So this kind of leasing structure is changing and has been discussed for months in the private sector. So we can see the changes in the very near future. And the landlord and also the investors, say, are also thinking about the socially responsible investing. This can be found in our research later. And of course, as I mentioned, all the investor and the flexibility is a key, as agreed of all the participants in our interview. And they are kind of seeing that the importance of changing the management as well. So here, I'm going to talk about our research method, because this is a very pioneer or the pilot study in this area from our team. So we don't really have much quantitative data, but we try to deliver the research with a mixed method approach. We use the strategy event data of a range of the UK retailers. And also we conducted interviews with retail asset managers and landlords. So here, I like to demonstrate the result a little bit more. It's quite straightforward from the interview. They can see the changes in retail asset management strategy, no matter from the asset manager side or the landlord side. And the changes can be categorized into different types. First of all is the asset allocation strategy. As maybe you've seen the news that the British Land is going to spin off some office assets and change them into the retail park, which is actually the logistic property. And not only British Land, but also some other retail REITs are spinning off the non-core asset as well, according to our participants in the interview. And also, more importantly, they are trying to re-identify the function of the physical store. So the physical store has to be has been acting as the place where selling the product for ages. But right now, it's not necessary to be true in the future. Let's say, because we are experiencing these changes of the consumer behavior. They can shop online, it's more convenient, maybe they got more discount even there. But still they hope to try it on, they hope to see it, they hope to experience it. That is why the function of the physical store will be re-identified, maybe into some other roles like the experience center or the showroom. That is also some kind of common conclusion from our participants. And they also mentioned the landlord-tenant relationship a lot during our interview. For example, like I said, the socially responsible investing would be a key factor for their future development, and is kind of more and more important for the asset managers and landlords. And also, especially for the asset managers, they think the customer engagement feature will be very important element in the tenant selection. So when they are comparing two different tenants, one is only selling goods, but the other can engage the customer better. For example, a experiencing store or like factory, some toy store making toys as well as selling it. So that will attract more footfall, let's say, to this high street around the area. So this kind of engagement will be also helpful for other tenants. So the second tenant will be the preference for the landlord. But this is kind of the common conclusion from our asset manager side. And regarding the COVID-19 pandemic, they also provide some reflections on the Red Holiday scheme. Not many landlords are actually welcoming this kind of scheme, of course, but they show understanding to the tenants, which is in a way actually reflect to the ESG, that's the social responsibility of the landlord. But again, nobody wants to see this kind of regulatory scheme intervention to the market that much. So maybe in the future, by changing the role of the retail real estate, by changing the landscape of the urban area, and by changing the leasing structure of the retail real estate, this kind of regulatory changes can be avoided, and we will let the market to work it all. That's what we are thinking, and also our participants agree on that. And on top of it, we also have done some research about the strategy changes of the different retailers. To investigate that, we collect and analyze the omni-channel strategies of 57 selected retail brands across the 10 sectors in the UK. They all have high street stores in major UK cities. It might be a little bit biased because we can only select the listed companies, which is also the retailers. But this gave us a lot of information and the changes of their strategy as well. And the strategy statements are actually collected from the financial report of the listed firms, and the news and analysis items from the database called Minto, and a website called Retail Gazette, and another database called CoStar, and other industrial regional press media like BBC or Guardian in the UK. And our data collection time window is from 2012, January to December last year. So here are our category of the strategy changes. We have 4 types of strategy. One is the store portfolio, and the second is the in-store engagement. The third one is omni-channel retailing, and the last one is the supply chain. And in each category, we have some sectors to have different strategies in place. And also here are the searching, let's say, the keywords when we do our text analysis about searching. Okay, so that's the brief introduction of our searching. And after collecting all the data, we've done a very simple statistic analysis of the correlation between the strategy and the sales per store. We can see that especially this experiencing issue, the in-store engagement, we can see as highly relevant, correlated to the total sales and also to the sales per stores. And when it comes to the omni-channel retailings, the improvement of omni-channel retailings and enhancement of the omni-channel retailings actually improve the sales in physical store as well. Of course, in a way, in general, it improved the overall sales as well. However, we can see because our time window is quite long, from 2012 to last year, so we can still see the improvement of the physical shop, expansion and etc., relocation. But we can see the effect actually from the physical store strategies are very minimal. Right? We can only see the closing store actually have a positive correlation to the total sales, and we can see the upgrade of the current store, especially some experiencing store can help the sales per store, of course. And here is a very straightforward demonstration of the retailers' strategy changes over year. We got 2012 to 2014. We can see in different sectors, different emphasis of the strategy changes. And when it comes to 2015 and 2017, so more sectors are getting involved in the changes. And when it comes closer to now, to present, we can see a lot of changes, especially the daily merchandise, because these are the parts that people are used to go to the store to make the consumption. But especially during the pandemic, you can see a lot of changes here in the daily merchandise. And here are about the strategy in the shop portfolio optimization. We can also see a lot of changes, especially during the past 2 years. There are some shop close and a little bit relocation of the shops, and quite a lot restructure of the lease and lease negotiations here, especially in the closing sector. And in terms of the in-store engagement service, we can also see the changes over year. Yeah, again, I have to draw your attention to this daily merchandise. I think it's mainly because of the lockdown and the pandemic. People were paying more attention to the engagement of their customer. And again, the CSR, let's say that corporate social responsibility, are putting on the table right now, draw a lot of attentions by many sectors actually. And here, in terms of the omni-channel improvement, we can see some changes, but not as expected, because I'm guessing that it's still in the early stage. Because back then, maybe 8 years ago, there's nobody talk about omni-channel retailing, but right now it's a hot topic, and you can see that it's spread quite evenly in different sectors here. They are developing a new platform to do omni-channel retailing, and they kind of collaborating with each other and try to enhance their omni-supply chain. This is quite challenging this year, especially because of the logistic and etc. issues. And all the retailers are working on that as well. So here comes to a simple and straightforward concluding remarks. Overall, our paper actually presents some evidence based on the highlight of an urgent need of the change for physical stores, and we urge the retailers and also the landlord of the retail real estate to embrace the digital platform as a key function of the multi-channel retailing business, so that high street and the physical store can survive and thrive again. Of course, we are welcoming all the discussions and the comments and the collaboration in future to do more and deeper research in this area. Thank you, everyone. So if you have any questions, I think here is the time.
Thank you, Sherry, for sharing with us your informative and this pilot study on this interesting topic. So I see any questions?
Okay, I just want to say hello to Sherry. Okay, again, hello. I have some question, because at the beginning you talking about the online platform digitalization, and later on you have some like empirical studies. So my first question is, does all this strategy change I say introduced by this digitalization or caused by this digitalization, or there could be some other reasons that cause some like different strategy that you identify?
Yeah, actually, from our evidence, it shows that it's not only the digitalization. Of course, the technology actually accelerates this process because it's happening really very slow here in the UK. We still embrace, go to the store to kind of get together in the community. So the town center is actually not only taking the responsibility of the retailing, but also communication to like a glue for the whole community. But right now, this pandemic is shocking this kind of the coherence of the whole community and try to reform the high street stores. So it's changed based on the technology support, of course, but also I think especially the bigger retailers, let's say the high street brand Zara or H&M, they during the pandemic they also apply for the rent holiday, which is absurd. But they actually, you can see significant change of their strategy, putting a lot of things online. So I think the digitalization is not the only force behind, but it's one of the major forces.
Okay, thank you for your explanation, because I think that probably if you can give a more detailed research design to show that digitalization can cause some like very direct results on the strategy and sound like the sales performance, then I think that probably it will be much more rich results that you can get. But let me ask another question. Okay, because it shows the CSR significant positively affect the sales performance. CSR actually is a quite hot topic. Okay, not in the only in the like the tenant landlord relation, but like green building, also in the like green finance or whatever, all of firms' performance. So most of I think most of the study maybe show that it is not so significant actually. Although everyone says CSR, but actually CSR may not help so much, but it may help to reduce the risk or like to enhance performance during some crisis period. But in your mind, how CSR can help these retailers, and then through what channels to that you can identify?
Yeah, actually, that's a very good question. I've been doing some research about CSR as well, so it's one of my interests as well. And actually, this question is drawn by one of our participants from the interview. They mentioned that for the new generation, like the millennial generation and Generation Z, actually they pay more attention to social responsibility, to the environment. So let's say a retailer, if they use eco-friendly packing, they will get more consumers from the new generations. That is their observations, and they have some statistics, but although they can't really release that data to us. And that actually lead us to look into the annual report of each listed retailers in the UK to see whether they have some strategies emphasizing the CSR in their online or in-store strategies. And there is, and when we match the data together, it's a very simple statistic correlation. So in a very straightforward correlations, they are positively correlated to each other. But still, we need to do further research to see what kind of CSR items are related to the general sales and the sales per store.
Okay.
But yeah, again, for the real estate firms, it's not that significant. I agree.
Yeah. Okay. Thank you.
Okay. Thank you very much for your discussion. If no other question, we are coming to an end to this to today's symposium. And thank you again, Sherry, for your views and the discussions. And before we conclude this session, because some of the speakers, due to the time zones, so in the morning actually they don't join us and have a Zoom photo. So may I now take this opportunity to invite speakers and audience who are still in the room to turn on your camera, and we have another photo. Okay, thank you very much. Okay, let me take the photo. And I will send it to you after. Okay, done. Okay, so thank you very much, everyone, for joining the event today. It's great, talking and learning from your views. And I hope to see you, somewhere face to face in the near future. Okay, so that's the end of today's symposium. Thank you very much, and goodbye.
Thank you. Goodbye.
Bye. Bye.
Bye. Bye. Bye.